from this White House that they need to see freedom of navigation when it comes to the Strait of Hormuz as part of any potential agreement. And our own analysts at Bloomberg Economics say that as of now, their assessment is that we are going to see more escalation rather than negotiation, as their base case remains that there is going to be an uptick in fighting before this turns into what they are calling a low-intensity war. Now, of course, President Trump could still delay his threats himself, as we've previously seen him done before, considering yesterday he did say that he feels that Iran is negotiating in good faith and that he actually feels that Iranian leadership has been hampered from effective communication with the U.S. over security concerns, alluding to the fact that that's partly why he gave Iran some more time delaying this deadline before. But still, at least publicly, Iran has really taken this hardline stance, rejecting a ceasefire proposal yesterday, putting out its own top 10 demands, many of which were considered non-starters by the U.S., and continuing to hit energy infrastructure in the Gulf. Now, Lisa, Bloomberg News did have some new reporting overnight. People familiar with the matter telling us that President Trump has also considered seizing Iranian oil, not just as a leverage point over Iran, but actually a leverage point over China amid the ongoing trade negotiations. Still, sources caution that there are no plans at the moment to do so, as President Trump indicated yesterday that he would be taking a political risk by keeping troops in the region longer than necessary.
Tyler Kendall, thank you so much, as always, for that. General Robert Walsh of Academy Securities writing, infrastructure is only a legal target if it directly supports military operations. Dual-use systems like energy, ports, oil are where things get legally and politically risky. General Walsh joins us now. General, thank you so much for being with us, and we'll get to the legality of certain types of strikes in a moment. I just want to start with, how likely do you see escalation as the outcome of tonight?
I think the path we're on, Lisa, good morning. Thanks for having me today, is we're on that escalation. We're probably seeing some of those strikes start to happen today. You've had some of your reports that the IDF has started that. I think this is just kind of a test of wills here now to see where today goes. And I think President Trump was very clear yesterday that if Iran does not come to the negotiating table to negotiate fairly and honestly, then they're going to continue to escalate this. And the escalation will continue until Iran really decides that they want to negotiate in good faith and start to give in to some of the things that the Trump administration is looking for.
And one of the things, the Trump administration is now looking for, General, is to have the Strait of Hormuz open. You do believe that Iran will open or ease the strait, but you say only when it extracts enough value. What does that scenario look like?
I think that value they're looking for is one of the things they're saying is they want control of the straits when this is over. And I don't think that's anything anybody in the Gulf region or the U.S. side wants at all. They also would like the U.S. and Israel to stop all military actions. One of their earlier things was they would like the U.S. to leave the Middle East. So I think, and another big one that is on the table by Iran is they'd like to continue enrichment. So controlling the straits into the future and continuing to be able to enrichment is one of those things that's just off the table for the U.S. as to how far we've been. And I think this escalation will continue. There's a point in time here that the U.S. makes the decision that we continue to escalate, and eventually you just go for ending this thing, and you just go after taking down their military capabilities just as far as you can take it. Some of these infrastructure targets we talk about that would be dual-use type targets. The U.S. has to be careful on that, but you start to really just take down their military capabilities to go back into production and be able to build these capabilities up again. I think that becomes a real challenge for them when you start to take down some of these infrastructure capabilities. And I think Tyler also mentioned China. I think China's a key thing going into this is when this is all over, I think President Trump needs to look President Xi in the eye and go, which side are you really on when it comes to the global community? You're supporting, President Putin in the Ukraine war, and here you are supporting the Iranians with missiles and technology. Are you going to continue that, or are you going to be more on the side of the world community?
I suppose, though, if President Trump does want to end it, and he does so with more military force, General, do you expect that they need to also be able to regain or get control of the Strait of Hormuz and allow for free passage? And how difficult would that be of an operation?
Yeah, I think that's very clear that the path that the U.S. is on is they start to continue to take down the Iranian military capabilities in conjunction with the Israeli Defense Force. They continue to take that down. They've put this bubble really over the entire country. Now they really have to focus on another phase and just really focus on the Straits of Hormuz to be able to make that more safe for commercial navigation. It obviously would get to the point where the U.S. Navy could come into the Gulf. They could escort commercial tankers through there. And that's another phase that we could be going into. And I certainly think it's doable with the capabilities that the U.S. military has. And that would be another phase as we move forward. The U.S. is not going to allow Iran to continue to have this leverage over the Straits of Iran. This will take longer than the original plan had thought because the enemy has a vote. The enemy has voted to use the Straits of Hormuz as leverage. And now that they're using it, the U.S. is going to have to move to a phase where they make that much more safe, where they can bring in the commercial shipping. And again, I'll say that they can do that.
We just have about a minute left. Just getting some headlines reporting from Axios saying that the U.S. conducted strikes on military targets on Karg Island. Based on your understanding of the region, how important is Karg Island? What kind of targets could be in their sights?
I think the big thing is this is really kind of the key thing for the Iranian government, but also for the IRGC, which gets 50% of its funding from the oil that goes through Karg Island. So this is a lifeline to the regime. And if the U.S. starts to hit these military targets, it's a signal today that we're serious about going after infrastructure that is important to the regime. And the more and more we see with this regime, the more that we're seeing that they're isolating the current political leadership, President Pezeshkian, and they're taking more and more control and becoming more and more hardline. So an attack on Karg Island would send a clear signal to the IRGC that President Trump is serious, the Israelis are serious about not allowing them to continue to control oil, get money, and continue to grow their military capabilities.
General Robert Walsh, thank you so much for being with us and all of those insights. If you are just joining us, we are getting news reported by Axios that the U.S. did conduct strikes on military targets on Karg Island. This follows reporting from Iranian state-linked media saying similarly that they did see attacks. You are seeing oil prices inflect just a touch higher on the heels of these reported explosions. Coming up next, Jorge Leon of Rystad with energy clearly in view.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Seeing a move in markets on the backs of a series of headlines earlier this morning. Coming into the session, we saw a bit of optimism coming out with possibly another day, a fifth straight day of gains. Right now, that has turned negative following reports of explosions on Karg Island, and Axios reporting that the U.S. has conducted strikes of military targets on Karg Island. You can see the Russell 2000 getting beaten up the most, down 0.7%, similar declines across the board on the heels of a real move between oil and rates. The idea that when you do get these oil spikes, rates tend to sell off, yields go higher, and that is what you're seeing. Earlier in the morning, we saw actually a bid into bonds throughout the curve. Now it's the opposite, it's reversed. You're seeing two-year yields up about a basis point at 3.86%, 10-year yields 4.34%, ahead of a bunch of supply coming later this week. 3-year today. Tomorrow we've got 10-year and then 30-year coming out the day after that. And then what you do see, the big story has been in the oil space, and what you have seen once again with concern of escalation, oil prices higher. This is the June contract for both Brent and WTI, both higher by about 1%, 110.74 on Brent, 99.58 on WTI. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Positive news out of Washington lifting the insurance sector, with the government coming out with a better than expected update on Medicare, raising payments by about 2.5%, translating to about $13 billion flowing back into the industry. And importantly, it's a clear step up from the initial rates proposed back in January, which were about flat. So we are seeing shares of Humana up 9.6%, while United Health and CVS are also rising. We are also seeing shares of Broadcom up 3.2%. Google trimming some of its gains on this partnership. Broadcom locking in a partnership with Alphabet to help develop and supply Google's custom-built AI chips, also known as TPUs, along with the networking behind those systems. We know that Anthropic will also tap into that capacity, with all three deepening their partnership. And we end on shares of ARM ADRs. They are falling 3% on a downgrade by analysts over at Morgan Stanley to equal weight. And this call is all about execution risk as ARM tries to move beyond licensing its chips to actually selling them. Analysts warning that this introduces a new layer of complexity and that it could put ARM in competition with its own customers. Lisa.
Thank you so much, Yahira. On our radar this morning, crude prices climbing following reports of explosions on Karg Island, home to Iran's largest oil terminal. Meanwhile, President Trump vowing to destroy Iranian power plants and bridges if a ceasefire agreement is not met by tonight at 8 p.m. Eastern. And Iran maintaining a total blockade on tankers carrying liquefied natural gas through the Strait of Hormuz. More than a dozen vessels are currently idling after being denied clearance, a standoff that has already pushed global exports to a 6-month low. And lastly, Cleveland Fed President Beth Hammack making some headlines, saying a rate hike could be appropriate if inflation remains above the central bank's 2% target. Coming up at 8:30 a.m. Eastern, our own Michael McKee sits down with New York Fed President John Williams. Danny, this is the question. Is the issue just how long the Fed is going to wait before they cut rates, or could they seriously be considering a rate hike should the oil shock deepen?
This thing, just introducing the two-way risk certainly changes things for markets, even if she did say a cut is also possible. But this is a rates market that at one point during this conflict started to price in the possibility of hikes. That gets taken off the table. Do we need to add to that? You do see Treasury yields. They've moved the most since 2022 and that conflict with Russia. And you were talking about this. The reason 2022 was different is because hikes were on the table, and they haven't been this year. What happens if that changes?
Yeah, I was just noting that Cameron Dawson, when she was on earlier this week, yesterday, in fact, she wrote in her notes a phrase that I loved: find someone to believe in you like the bond market believes in the Fed's ability to get inflation back to 2%. It's the reason why I keep watching five-year forward break-even rates, because there is this sense that regardless of what happens, the Fed has this under control. And yet it has been more than 5 years where we have had inflation above that 2% target. Clearly that makes some people very nervous, especially because no one wants to say, this time is different.
Well, you've been pointing out how the oil market and the bond market have been trading in lockstep this morning. Maybe something there needs to change, because the backwardation is so extreme in oil futures. You get a really steep drop off in what we're expecting for further out oil prices. Perhaps you won't see 5-year inflation expectations move until you see oil prices move too, because for now it really has been in the front part of that oil market that's seen the majority of the pain.
Let's get more insight on that, because that's been one of the conundrums. Is the forward-looking curve really reflecting some of the risks that commodity analysts have been expressing, certainly on this program, but many others as well? So, that is our top story. Crude pushing higher on reports of explosions on Iran's Karg Island. President Trump insisting any deal with Tehran must include the reopening of the Strait of Hormuz.
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil and everything else. I would say it's a very big priority. We have a concept where we'll charge tolls.
Jorge Leon of Rystad Energy writing, this is no longer just a supply story. It's a broader macro story impacting growth, inflation, and policy. Jorge joins us now. Jorge, thank you so much for being with us. What do you make right now of the forward-looking curve in crude that points to a de-escalation that the market is taking a signal from?
Hi, Lisa. Thank you for the invitation. Indeed, I think that right now the market is trying to understand what is likely to happen. Are we going to see escalation or de-escalation in the coming hours? On the one hand, we have a deadline that is clocks are ticking. On the other hand, we have this news that there was an attack on Karg Island. So still very much unknown. But at the same time, I think that we should brace ourselves for a possibility that this becomes a longer conflict, that this, the traffic through the Strait of Hormuz remains closed for an extended period of time. So I think that that's what the market is trying to figure out at this moment.
And a lot of people are turning to scenario analysis simply because we don't have a lot of facts. One question has been, at what point is this a growth shock? And at what point is this an inflationary shock? What are the thresholds you have on oil prices where it's one or the other?
Sure. So at the moment, let's think about scenarios. If oil price averages $110 per barrel this year, global growth will be trimmed down by around 1 percentage point. So from around right now, 3% before the crisis to 2%. Now, at the same time, $110 per barrel means that global inflation will pick up rapidly. And then you have the secondary effects of, if the central banks around the world are going to start increasing interest rates, then that complicates even more the macroeconomic outlook. Now, let's not forget that the ECB here in Europe and the Fed in the US have the next meeting on April 30th. And there is a lot of possibilities at this moment, if the war continues, that we are going to see actually increases in interest rates, as I said, on April the 30th.
Jorge, some have pointed to PIMCO being among them, the opposite side of that, which Lisa was also getting at, that it would result in a hit to growth. Why would the next move be a hike and not a cut if you do see lower growth as a result of higher energy prices?
That's a great question. This is normally part of the book of central banks, right? Fighting against inflation. That is a key for any macroeconomic director, for any director of a central bank. Inflation is the key enemy of macroeconomic growth in the medium and long term. So, and that is part of the mandate of central banks. So I would assume that same manual is going to continue in this time around. That is what central banks have been doing when there is a supply shock which increases oil prices. Killing the inflation is fundamental for a more optimistic macroeconomic outlook. Not in the very short term, I agree with you, But if we're thinking about how we exit this conflict, then increasing interest rates, killing inflation is probably one of the most sensible things to do.
I just keep thinking about what we heard from the IEA, who called this year's disruption the worst ever for the global economy, equivalent to the two major crises of the 1970s and the oil crisis in 2022 when it comes to natural gas. Jorge, are you looking at a similar environment, a disruption, the worst ever for energy markets?
Yes and no. There are some elements that point towards this is much more serious than, let's say, the two oil crises of the 1970s. And there are all other elements that say, no, they're probably a little bit less serious. Let's focus on the ones that show that this is slightly less serious. First of all, the world depends less on oil right now, right, than we did in 1970. Now we have nuclear, we have renewables. So the oil intensity of the global economy is lower, significantly lower now than in 1970. But then you have the other argument that back then in 1970, there was not a lot of gas demand, right? And right now you have a double crisis, which is oil and gas. So those are the two elements that we could probably think about, when comparing to the previous energy crisis. But I agree with you, whether it's a bit more serious or less serious than the previous crisis. It's sort of slightly irrelevant. Right now, what we need to focus is on how long this is going to last for, to make sure that we have the correct verdict at the end of the crisis. The duration is the key variable here. Is this going to end up being an extended, a prolonged crisis, or this is going to be a short-lived crisis?
Jorge Leon of Xauusd Energy, thank you so much for all of your insights. We've been reporting throughout the morning about explosions heard on Karg Island, first reported by Iranian-linked media Axios, coming out and saying that the United States had attacked certain sites on Karg Island, specifying that they were military targets. Fox now reporting some new details saying that the targets included bunkers, radar station, and ammo storage, but that they intentionally did not target the landing docks on Karg Island. Danny, some details coming out right now.
Again, fog of war, trying to understand exactly what this means. I was thinking to our conversation with General Robert Walsh just moments ago, and the likelihood that the U.S. would want to get control militarily of the Strait of Hormuz, that maybe that's where they eventually need to go. That would include Karg Island. At the moment, it is just explosions. It's not, as far as we understand, people on Karg Island itself, but it's just another factor to think in as the deadline ticks down to 8 p.m. today.
Yeah, and the drip, drip, drip of headlines has pushed oil futures a little bit higher and higher and higher as commodity traders assess whether this pushes us closer to escalation or de-escalation. Again, we're looking at crude trading at $114.50. That is the May contract. Brent crude trading for the June contract is $110.67. When you look out to June, comparing apples to apples, WTI up about 0.9%, Brent up about 0.8%. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Israel saying it launched a new wave of attacks on Iran, targeting dozens of infrastructure sites in the country. Iranian state media reporting that a joint U.S.-Israel airstrike hit a railway bridge in the center of Iran that killed 2 people. Israel had previously warned Iranian civilians to avoid the country's rail network until 9 p.m. local time. Here, Morgan Stanley is planning to debut a new credit fund despite concerns surrounding the sector. The fund will invest predominantly in private credit and include a wide spectrum of credit strategies. The bank plans to allow redemptions of up to 5% every quarter. And debt to fund AI still seeing huge interest. The Blackstone-owned data center operator in the U.S. raised $4.6 billion in investment-grade notes to refinance a project hosting thousands of servers, including for Microsoft. The deal attracted about $12.5 billion in demand, according to sources. The banks involved declined to comment. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. And that kind of gives a perfect example of how wide open capital markets are and how much demand there is to finance the data center build out, the infrastructure build out tied to artificial intelligence, tied to an industrial renaissance, and speaks to the reason why some people are looking past this to medium and longer term themes.
By the way, it's also the antidote to the fears over private credit, that credit markets are still wide open. Another Blackstone related story, they hit their cap for their opportunistic credit fund at $10 billion. Huge amounts of demand for investors to get into a private credit fund from Blackstone.
A lot of conflicting signals right now. None of them really pointing to some sort of massive credit downturn, at least not for now. Up next, bracing for economic shock.
There's no real sign of inflation expectations becoming unanchored. But remember, the energy shock, we don't really still know how big it's going to be and how long it's going to last. The war is the biggest risk. And, I think the markets are still, underestimating that risk.
Up next, Calvin C. of BNP Paribas as we assess the tea leaves coming from the economic data that has happened, as well as what's up next. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Surveillance. We're looking at a market where you're seeing optimism just fade a touch around the edges. Equity futures lower, down 0.5% on the S&P index as we look toward that 8 p.m. deadline Eastern time between the U.S. and Iran. Meanwhile, a bit of strength in the euro, 115.61 versus the dollar. 10-year yields inflecting up. Again, that lockstep relationship between yields and oil. Oil prices higher, 0.9% now on Brent to 110.71. Under surveillance this morning, bracing for economic shock.
This is both a shock to growth and a shock to inflation. So the Fed is back where they were, a year ago. I think in the current environment, they're just going to sit on their hands for quite some time. There's no real sign of inflation expectations becoming unanchored. But remember, the energy shock, we don't really still know how big it's going to be or how long it's going to last. The war is the biggest risk. And, I think the markets are still, underestimating that risk.
Here's the latest. Cleveland Fed President Beth Hammack telling the AP she sees a possible rate hike scenario if inflation persists as the war in Iran clouds the economic outlook. Calvin C. of BNP Paribas writing, "We believe the FOMC may now regret having eased policy in 2025. Our base case is that the Fed moves to a symmetric bias in April and keeps rates on a long hold." Calvin joins us now. Calvin, great to see you. Thank you for being here.
Thanks for having me.
Regrets the rate cuts. Please explain, given the fact that a lot of them are saying that the economy had been weak and that labor market is showing signs of cracks.
I think what the Fed is now reevaluating is why the labor market was weak late last year. The Fed cut rates because job gains trickled to a really low level, but increasingly you could hear many Fed speakers now increasingly blaming those low levels of job gains on just simply low labor supply. We have very few immigrants coming into the country now, and I think what many at the Fed are now accepting is that low level of job gains are fine, so long as the unemployment rate remains relatively range-bound, which it has been. We're at full employment.
So you think Beth Hammack is not an outlier in talking about potentially putting a rate hike back on the table, not as a likely path of travel, but as a potential outcome should inflation remain at the levels that it currently is at?
The reason why we think the Fed is moving to a symmetric bias later this month is because we think most at the Fed now are open-minded to a wider range of possibilities. I think the Fed is going to be really hesitant to hiking rates, but there are two conditions that we think could get them there. One is if the unemployment rate keeps dropping, down perhaps to that 4% level, that would clearly tell the Fed that, maybe the current setting of monetary policy actually isn't that tight. And the other is inflation expectations. This shock to oil prices that we've seen bumping inflation, it's not the first one. This is the fourth shock that we've seen to inflation now for the last 5 years. And the risk is that inflation expectations begin to unwind. And if that happens, that's going to be a really tricky spot for the Fed. And that may be a path, we think, that could potentially get them toward hiking.
Just on the employment side, do you believe that what we saw on Friday wasn't a one-off, that it does point to continued strength in the labor markets, just because there's been a lot made of this pattern of basically has gone bad month, good month, very bad month, very good month, that feels like it's kind of evened out to something steady? Where do we stand at the moment?
It's not new that we have a lot of volatility in the labor market numbers, which is why we tend to look at things on a moving average basis. And in that regard, we're seeing job gains that are, again, slow, but good enough. The job gains have been up and down, but the unemployment rate has been surprisingly steady. And we think that's the number one thing that the Fed is keeping its eye on, that unemployment rate. And because the break-even rate of payrolls is so low, in other words, the number of job gains you need every month to keep the unemployment rate flat, we think that the Fed is very comfortable just sitting on its hands. The labor market isn't screaming hot, but it's not blisteringly cold. It's just kind of in the right place, which is what we think gives the Fed time to just see it through, keep rates on hold for a while, and determine their next move.
So that's one of your prerequisites to allow for the conversation about a hike having. On the other side of things, with inflation expectations, what is the mechanism for it to bleed through and not just be a one-off energy shock? What needs to happen in order for that to translate into inflation expectations elevating and remaining there?
Sure. As mentioned before, this is not the first time that we're seeing higher inflation. We had the post-pandemic reopening. We had Russia's invasion of Ukraine. We had tariffs, and now we've got rising energy prices because of the conflict in the Middle East. The Fed is very worried about consumers expecting higher inflation in the future because it becomes a self-fulfilling prophecy. And if consumers, after seeing another shock to inflation, throw in the towel and say, you know what, that's it. This economy is going to see permanently higher inflation, and people start pulling forward their purchases, then again, that can lead to inflation running higher and higher and higher, and the Fed would need to get ahead of that pretty quickly to arrest those expectations should they begin to unanchor.
The biggest pushback to this is that even though we got a hot headline payrolls print on Friday, the actual wages did not increase as much as people expected, and it actually increased at the slowest pace in a number of years, highlighting that we're not going to see necessarily that wage price spiral. Similarly, with the ISM service data that came out yesterday, the employment component fell to the lowest level that we've seen in at least 3 years. all of this pointing to the idea that there isn't really heat in the labor market that could sustain some kind of wage price spiral. Why isn't that enough for you to sort of take that aspect of the equation off the table?
We agree with that right now. Right now, there are really no wage pressures in the U.S. economy. The labor market is at full employment, but the labor market is not particularly tight right now, which is why I said earlier, for the Fed to consider rate hikes, we need the unemployment rate to be dropping to this 4% level or below. And at that level, I think the Fed would get a lot more concerned that with the labor market tightening a lot, that wages could begin to percolate a bit, but not right now.
I feel a bit like a broken record. At what point do oil prices get to a level where it's more of a growth shock than an inflation shock? And conversely, where can oil prices level out where it will be more of an inflation shock than a growth shock?
It's a delicate dance for the Fed to have to deal with. We think that right now the primary impact on the economy is on inflation. On the growth side, we think that oil prices probably need to be a lot higher than here for us to entertain something like a recession. And the reason I say that is twofold. One, energy is just a much smaller part of the economy now. In other words, the economy is less energy intensive. We use less energy to generate each unit of GDP output today than we'd have in the past. Number two, let's think about inflation-adjusted terms here in terms of oil prices. Oil prices are high, but if we look at things from an inflation-adjusted perspective, in order for us to get to the 2008 level prices of oil, we would probably need to be at somewhere around $200 a barrel. So when we put that into perspective, again, it's not great for the consumer. Our rule of thumb is that every dollar increase in oil prices or gas prices at the pump takes about $100 billion away from consumers' pockets if sustained over an annual basis. But historically, the levels that we're seeing now are high, but they're not crazily high on an inflation-adjusted basis.
Calvin C., this was great. Come back again soon. Thank you so much for being here. Calvin C. of BNP Paribas, as we parse through the growth versus inflation shock aspect of this. I'm just looking right now at diesel prices at the pump here in the U.S. The key indicator for how you ship goods that can get into consumer prices more quickly. Highest levels going back to 2022, Danny.
And then for gas prices yesterday, they surpassed 2004's peak for the second time. The other time before that was Russia's invasion of Ukraine.
At the same time, people continuing to spend, and that's why you're seeing some outlooks from a lot of companies. Next up, we've got Delta coming out tomorrow. Coming up next hour, Katrina Dudley of Franklin Templeton, Daryl Cronk of Wells Fargo, New York Fed President John Williams. Do not miss that with our own Michael McKee and David Seif of Nomura. This is Bloomberg Surveillance. Good morning.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Vienna report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equities are really looking for hope, for a resolution.
Panic buying more than panic selling.
The underlying shift to the U.S. and a reversal of last year's trade makes a lot of sense here. We expect volatility to continue.
In a 6-month window, I can see a lot of volatility.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Optimism fading as traders keep an eye on tonight's deadline for a deal with Iran. Reports of explosions on Karg Island keeping risk appetite at bay, but not extinguished. A dissonance developing between calm risk markets, open capital markets, and increasingly, Danny, jittery commodity strategists.
I was just looking at the performance of the major asset classes since this war broke out. Some of it is extremely logical. Oil up more than 50%, depending on what contract you're looking at. 10-year yields up 38 basis points, which is the biggest since Russia's invasion of Ukraine. Stocks are down less than 4%. And in fact, they've erased half of their decline to the most extreme of the extent. So you are seeing this disconnect. To your point, it is dissonance between what oil markets are pricing and what other risk assets are pricing.
And when last week we saw a little bit of a reprieve from some of the most extreme threats, we saw actually a bounce back, not just in risk assets with the best week of gains for the S&P and the NASDAQ going back to late last year, but a similar move in credit. So this is confirmed again by credit markets. And you actually saw March with the biggest amount of global bond issuance going back ever, really. And so you put this together, you wonder, is this a market that's overly complacent, or is this a market that is predicated on other influences that are driving the bus?
I was going to say, what is the setup here? Is it just that earnings are really good, corporations are resilient, AI spending continues, or that there is a belief that this conflict will end and it will end soon? That stands in contrast to one, an 8 p.m. deadline that's seen some very hawkish rhetoric from this president of escalation, and maybe current escalation ongoing right now with, to your point, those reports that the U.S. did attack military targets on Karg Island.
So the data that we've got coming up, we've got Delta earnings coming out tomorrow, which will be a key indicator as we really kick off an earnings season that begins in earnest next week. Of course, we also get Fed meeting minutes to give a sense of how many people are in Beth Hammack's camp of potentially putting asymmetric risk on the table of potentially a rate hike as well as a rate cut as being the next move. Jobless claims and core PCE as well as income and spending on Thursday, and CPI data coming on Friday. How important is inflation data at a time, Danny, where we're considering the idea of stagflation, we're considering the idea of prolonged oil prices being higher, while at the same time a consumer that's strong enough to absorb it.
It's something Kelsey Barra of JP Morgan said to us, that perhaps some of the complacency, if you will, in markets exists because it hasn't showed up in the data yet. We started to get that in yesterday's ISMs, sort of stagflationary feel to it. What happens as we continue to get more data? What happens if we get CPI that does show the biggest increase in inflation since 2022? Maybe then markets wake up, but again, there has been a real resistance to price anything like that in.
Right now, you're seeing a bit of a risk-off feel as we do get news of some explosions heard on Kark Island, reporting that the U.S. struck military assets on the region, not some of the shipping docks or other more civilian and commercial sites. We're seeing S&P futures lower by about 0.5%, 0.7% decline on the NASDAQ and Russell 2000. The bond space tracking oil, yields higher in tandem with oil prices higher pretty much across the board. Not significant moves still, a reversal from what we saw earlier this morning. 30-year yields 4.91%, creeping higher by 2 basis points. That question of do we hit that 5% mark? And in the crude space, both Brent and WTI, the June contracts trading up more than 1%, both of them 111 on Brent. We could see $100 even for WTI's June contract. Coming up this hour, Katrina Dudley of Franklin Templeton. As political uncertainty whipsaws markets, Darryl Cronk of Wells Fargo upgrading their outlook on the tech sector. And New York Fed President John Williams with inflation concerns weighing on the path ahead for interest rates. We begin this hour with stocks following reports that the U.S. has conducted strikes on military targets on Kark Island, just 12 hours away from President Donald Trump's deadline for Iran. Katrina Dudley of Franklin Templeton writing this: these events in the conflict could drive uncertainty through energy markets, which feeds directly into inflation expectations, rates, and overall market sentiment. Katrina joins us now. Katrina, great to see you. Thank you for being here.
Great. Thanks for having me.
So how do you frame this in terms of whether any of this is tradable or whether you just sort of sit and watch and sort of stick with how you're allocated?
So if you take a look, people are talking sticking with how you're allocated as being complacent. So you're actually kind of, really needing to fight that narrative that I am, not paying attention to what's happening. But if we look at the market and what is driving the market, it is AI sentiment, and that is really key. And we think that what's happening, the geopolitical concerns are real, but they're not undermining the core thesis that we went into this year with, which is continued tech AI spending, a consumer resiliency that is still there, a little bit more, less certain, but I think it's still there on the resiliency of that consumer. The geopolitical tensions have really undermined things, but oil, if you look at the entire energy sector, it's just such a small part of our market today.
At the same time, people looking past some of the consumer-facing industries and pointing to big tech. You talked about how the AI trade was something that really did have legs, and we were talking to Kate Moore about how that would be the last thing. The CapEx spending would be the last thing cut, considering this is an existential race. Goldman Sachs coming out, Peter Oppenheimer saying this is the time to buy the dip in big tech. Do you feel similarly?
I think that big tech is now a safe haven. I think that big tech is not as cyclical as we've seen it in the past. You're talking about it as being the last thing to cut. And that's the type of language that we use for things that are considered staples and stable items. So I think that AI and big tech, when you talk about that AI arms race, I completely agree with what Kate said, that the fact is, we are going to continue to invest in AI. We are starting to see returns from those use cases as well. And I think that that is the offset that the market is really ignoring at this stage, which is the idea that we've done all this spending, we've taken all those expenses, but now we're starting to see on use cases in our back office, for example, we're starting to see those cost takeouts. And so it's not now just always like, cash going into the AI spending bucket. We're starting to see the returns.
Even so, the Mag 7 big caps tech stocks, they certainly haven't been a monolith. They've been trading differently. It's remarkable that Apple has been one of the best performers when it feels like that was left for dead, that they'd missed out on the AI story. And then you look at something like a Walmart that is set to grow more slowly than all of the Mag 7, but it is priced at a massive premium to the group. How much of this market also just wants to see cash flow? That it's not enough, again, in years past that they were spending on AI and advancing, but balance sheets need to be robust.
I don't think in this stage of the investment that you need to have like a kind of pristine balance sheet. You're investing, and you're investing for growth. And that means that you are taking risks. You're taking risks in the sense that that capital may not be worth anything, but you need to do it, because if you don't, you're going to be left so far behind. When we talk about all of these AI providers, we were talking before the break, it is a little bit like a horse race where one gets ahead, one falls a bit back behind. But I do think that ultimately they're all investing. They've all got good products. We are continuing to invest and to make sure that our teams are staying ahead and have access to the best tools and the best information. And I think that that's what a lot of people are focused on. And what is being seen as complacency is actually no, it's just the fact that I have now had multiples come down in the tech sector. The Mag 7, though, is continuing to grow. 2027 earnings growth will be still above the rate of the earnings growth of the S&P. And I think that the valuations is coming down as a result of the stocks coming down is really starting to say to investors, maybe I just step in here, because that valuation negative narrative that we've been talking about throughout the most early part of this year is really kind of started to lose some of its shine.
Does this mean we've also put to bed the broadening out trade? Because it feels like we're back in this environment where we're not so sure about the consumer, other things are going on, what's happening with rates, but tech will reign supreme regardless of the environment. Does market leadership from here start to narrow again?
I think when we talk about the breadth of the market, we're talking about the Mag 7 and we're talking about the 493 other stocks. And even the Mag 7 is not just technology spending. It's not just purely tech stocks. And I think you do have consumer in there. You have Amazon, for example, which still is a big consumer play. You have names like Meta, advertising, still a consumer play. So I don't think necessarily it's just tech or not. The broadening trade has worked this year, and I do think it's going to continue to work. I think that part of what is working has been energy. That has been the surprise, but it's been driven by something that was also a surprise, which is the geopolitical tensions. But I do think that generally speaking, the rest of the market is still where you're going to continue to find opportunities. But we do think that there are select areas on the tech space where those valuations have come in, and we are not concerned about tech spending being cut.
Katrina Dudley, thank you so much for being with us. Wonderful to see you. Katrina Dudley of Franklin Templeton, thank you. I did want to bring this to you. We did get another post on Truth Social by President Trump saying this: a whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. However, now that we have complete and total regime change, where different, smarter, and less radicalized minds prevail, maybe something revolutionarily wonderful can happen. Who knows? We will find out tonight. One of the most important moments in the long and complex history of the world. 47 years of extortion, corruption, and death will finally end. God bless the great people of Iran. Bloomberg's Tyler Kendall joins us now for more. Tyler, how do you put this into perspective with some of the other posts that we've heard from the president of late?
Well, Lisa, at this point, it appears President Trump is not going to back down or delay his threat to hit Iranian civilian infrastructure by 8 p.m. Eastern tonight, posting here on Truth Social, saying that I don't want that to happen, but it probably will. But he also, of course, added, who knows? Of course, the president has before delayed and deferred his previous threats. And just yesterday, he did say that he felt that Iran was negotiating in good faith, even citing that he thought that Iranian officials were hampered in their communication with the U.S. over security concerns, and that's why he previously delayed this deadline before. Still, we have to pair that with reports this morning that Israel has already hit Iranian infrastructure, dozens of sites, according to reporting, as well as Axios reporting that there have been military targets hit on Karg Island. Pair that with Fox News reporting that this includes bunkers, radar station, and ammunition storage, but that loading docks were indeed spared, that we haven't seen the U.S. move into that point quite yet. So it's going to be something to watch and develop because, Lisa, as you well know, President Trump said that today it depends on what Iran does, whether or not the U.S. is going to wind down, or escalate its operations later tonight.
Tyler, do you have any sense of what the deliberative body is behind any decision that the United States makes? Who's involved? Exactly how much disagreement or agreement there is in these deliberations that are ongoing?
Well, at least publicly, Lisa, we've seen a united front from the administration, right? We are expecting some updates later today from Secretary Pete Hegseth, also the Joint Chiefs of Staff, Dan Kane. We know Secretary Marco Rubio has also been closely involved in all of these discussions. There has been reporting that President Trump has pushed for a perhaps more aggressive stance when it comes to this, considering that we know some of his previous comments going back decades when it comes to his feelings on taking Karg Island, as just one example. At this point, though, the administration has put out their negotiating team yesterday. President Trump confirming that that includes Vice President J.D. Vance, along with, of course, his special envoy, Steve Witkoff, and also Jared Kushner, many of whom these officials were in the room with him yesterday in the briefing room. Of course, also the CIA director as well. So there seems to be a lot of different angles here. But even, Lisa, yesterday, I'll point out during those remarks to reporters, President Trump himself said that sometimes there has been disagreement with the strategy when it comes to Iran among top military officials. But as of now, they are showing, of course, that united front.
Tyler Kendall, thank you so much for that work and for coming on so quickly. Really, honestly, Danny, looking at this, how does anyone take this type of post? A question of, yes, this is amping up the rhetoric, but saying a whole civilization will die tonight, never to be brought again. I don't want that to happen, but it probably will.
But then at the same time saying that we have complete and total regime shift, where you have smarter, different, and less radicalized minds, and pointing to optimism that maybe there will be a deal. It's something that General Robert Walsh of Academy Securities pointed to, of a carrot and stick approach from the president, that maybe there's a method behind the mixed messaging, that you claim there's a good chance of a deal, and that's deliberate to allow for a last-minute deal, that you have to have that present in there while leaving the extreme of the threats. Again, though, the issue for markets is this kind of takes off the table, or seemingly at least takes off the table, any kind of walk back.
Yeah, in the markets, what do people do with this? Unclear. You are seeing a little bit of a leg lower in equity futures on the heels of this. Up next, the morning calls, plus Daryl Cronk of Wells Fargo as President Trump's threats weigh on markets. That's coming up next. This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It is deadline day. There's a question of what happens after 8 p.m. Eastern. A drumbeat of headlines have been taking this market lower throughout the morning. Explosions were reported on Karg Island, then reportedly the U.S. hitting a number of military-tied assets on Karg Island. And now President Trump coming out with a post saying a whole civilization will die tonight. I don't want that to happen, but it probably will. As these sort of drumbeat of headlines comes out, a sense of unease falls over the markets, and you do see that reflected in a risk-off feel. You're seeing stocks lower by 0.6% on the S&P futures. You're seeing a greater decline across the board with Russell and NASDAQ down about 0.8% in the bond space. Yields slightly higher on the back of an increase in oil prices, particularly at the long end of the yield curve, which is interesting, given the expectation that the Fed could potentially move to a more hawkish position in the oil futures space. The June contract for both Brent and WTI both inflecting up more than 1%, seeing now WTI, that June contract, at near $100 a barrel. We are going to get back to that post that we got from President Trump and what the ramifications of that 8 p.m. deadline are later today. Time now, though, for the morning calls. First up, Piper Sandler lowering its price target in Apollo to $146, noting a difficult start to 2026 with macro headwinds. Those shares lower by more than 1%. Next up, Seaport Research double downgrading Lennar to sell from buy, seeing rising concern of further slowing in housing activity on the heels of higher mortgage rates, slowing down further an already rather sluggish industry. And finally, Morgan Stanley downgrading ARM Holdings to equal weight, noting plans to sell its own chips could pose risks. Those shares lower by more than 4%. Turning back to our top story, stocks falling and oil rising following an ominous threat from President Donald Trump on Truth Social. The president writing, "A whole civilization will die tonight. I don't want that to happen, but it probably will." Daryl Cronk of Wells Fargo joins us now. Daryl, typically markets try to strip out emotion. They try to look at what the facts are on the ground. How do you handle headlines that increasingly have the potential to be potentially history-making, but also could be nothing and could be a viable dip? I mean, how do you sort of assess this type of risk?
Yeah, I think it's a great question, Lisa. It is the question of the day, so good morning. I think what you want to look for in this kind of environment is what we call high convexity trades. And what do I mean by that? I mean trades that, probably have some minimal downside to them, but could have big upside if the circumstances and the conditions flip. That's part of the reason we just did a pairs trade of downgrading energy and upgrading technology, because we see the asymmetry there of the risk reward being very, very favorable in today's world.
At the same time, Daryl, how do you understand what's a haven at a time when potentially we could be looking at something that's either a massive inflationary shock or potentially a massive hit to growth, as not just a question of prices kill some of the activity that people are opting to go on, but actual shortages percolate into some of the fastest growing areas in the world?
Yeah, Lisa, it's a great point. I mean, I think what you end up with is you have the real supply-demand shortage that's probably going to persist for quite some time. That's well documented and well said around oil. But if I look at something like what I was just referencing, I've got energy equities up 33%, tech down 7%, a differential of 40. Well documented that tech now trades at the S&P forward 12-month price earnings multiple. So I'm paying no premium for double the earnings growth, right? The consensus 12 months forward on the S&P is 18% earnings growth. Tech is supposed to grow 35%. And history tells you, if you go back and look at these past oil shocks, you want to sell energy equities in advance of an oil price peak. I can't tell you exactly where the oil price peak is, but at $114 on WTI today, we'll take that risk reward that you can deploy capital and sell into that environment. History tells you when oil becomes the story is when you generally want to move away from energy equities.
It feels contrarian at this moment, Daryl, with everyone upgrading their earnings outlooks for energy and everyone saying this is the place you can hide out. So it's interesting to hear that. And does it also mean then so much has been made of the halo trade, the hard assets, low obsolescence? Have we gone a little too far down that path then? Is that overblown the attractiveness of away from digital assets and into the hard assets?
I think so. Again, go back to the high convexity. So when we look at areas where the downside is probably somewhat muted, but the upside could be real if that positioning, to your point, changes, Danny, it's places like I just mentioned, energy versus tech. Gold, I think, is another high convexity trade here, right? Probably minimal downside from 46.80, but to us, we have a 12-month gold target price at 5,900. That's 25% from today's level. I would put financials in that category too. You know, financial equities are down 9%. If you look at some of the alts managers, down 30 to 50%. You know, a lot of the bad news is priced in there. If things do change, even on the intermediate basis, and move higher, you've got some big upside there probably. And you could put digital assets in there as well. Digital assets have come down meaningfully, call it 50% in value. I don't think the downside is materially more there, Danny. And so, you know, if the world does change and conditions change and positioning is skewed one way, people have to reorient that positioning, either covering short positions or getting back long areas so that convexity can really work in your favor in portfolios when you use it wisely.
Daryl Kroc of Wells Fargo, thank you so much for being with us as we try to parse through what is noise, what is signal. We're getting a series of headlines. Not only President Trump's Truth Social post talking about the potential carnage that could occur tonight after 8 p.m., but J.D. Vance speaking in Budapest as he delivers a speech there saying that the U.S. is confident it will get an Iranian response, reiterating that the deadline is 8 p.m., saying that the Karg Island explosions and reported military-focused strikes does not represent a change in strategy. All of this coming as the pressure continues to rise.
I do wonder also, they're certainly not outright saying this, but if in here it might be a slight shifting of the goalposts. That J.D. Vance is saying, we are confident we'll get a response. He's not saying what the response will be, that it will be an agreement to a ceasefire, but is that enough for the U.S. to say negotiations are ongoing, therefore we're not going through with the wipeout of a civilization that the president talked about in his Truth Social post? Is that what's going on at the moment? It's so hard to know with these headlines coming very fast. And again, the very extreme rhetoric coming from this president.
If you are just joining us, setting up for this morning, the expectation was that there would be ongoing discussions until 8 p.m. Eastern this evening. A tone of optimism initially that has faded as reports of strikes on Karg Island continue to come out. The latest coming from the Wall Street Journal saying that the U.S. striked more than 50 military targets on Karg Island, talking about two officials that they spoke to about that. Then J.D. Vance saying that there is going to be no change in strategy, that what you saw in Karg Island was not a change in strategy. And then this post from President Trump, a whole civilization will die tonight. I don't want that to happen, but it probably will. Full of mixed messages. Nonetheless, amping up the rhetoric at the very least, with a market struggling to know what to do with this.
And the vice president also saying on Iran that very shortly this war will conclude. It's similar rhetoric we've heard from the president too, at least on the equity side of things. It's one that has continued to look at the bright side. Again, will a deadline of 8 p.m. tonight change that?
Yeah, right now you are seeing a bit of a fading of some of the risk appetite. Equity futures have rolled over and are near session lows as we get these competing headlines dripping out through the day. The real underperformance has come from the Russell 2000, with yields going higher on the heels of higher oil prices. Do not miss what is coming up next. New York Fed President John Williams joining our own Michael McKee as inflation concerns weigh on the path ahead for interest rates. How does a Federal Reserve deal with potentially a two-sided risk? This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Coming back into another day of headline roulette as we wait that 8 p.m. Deadline that President Trump has set to reach a deal with Iran. Ahead of that, we are getting headlines that do indicate a ratcheting up of tensions with explosions in Karg Island, as well as, of course, threats of complete destruction by the end of the day, should there not be some sort of resolution. The U.S. now confirming the strikes on military assets in Karg Island. Right now, markets fading from some of the earlier optimism as the session grows older. Still not exactly dramatic declines, and actually pairing some of the earlier losses, down about a third of a percent for the S&P. 10-year yields now lower on the margins. 10-year yields now 4.33%, and Brent crude higher by about 0.5%, 110.32. We are getting some economic data. This is sort of the drumbeat of information that we're going to be getting ahead of core PCE on Thursday and CPI on Friday. Coming in weaker than expected with durable goods, although if you strip out transportation, you actually have a beat to that. Again, just sort of feeding into this drumbeat of information that central bankers are going to be considering when deciding whether this is an asymmetric risk to the downside or whether it's increasingly symmetric, calling for potentially either a rate cut or a rate hike as the next move. Let's turn to the Fed central bankers awaiting the first read of inflation since the start of the war. Bloomberg's Michael McKee standing by with a special guest. Mike?
Good morning, and we'd like to welcome all of our viewers and listeners on Bloomberg Television and Radio worldwide. I'm here at the New York Fed with the president of this regional bank, John Williams. Thank you very much for joining us this morning.
Well, welcome to the New York Fed.
We have so much news and headlines about Iran today, and it does affect people's economic lives a lot. I know you can't make a forecast, but what's the best estimate that your people have been able to come up with now for what this is going to do to inflation and how quickly?
Well, I think it will directly go into headline inflation because energy prices are an important component of that. So I expect headline inflation to actually be elevated, in the middle of this year. Of course, if energy prices come back down or stabilize, then that won't add more to inflation. So right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices.
What could we get to in the meantime? What's the sort of thinking about where inflation on a numerical basis could end up?
Well, again, it's hard to predict that.
Estimate, not a forecast.
Clearly, we can get into above 3% inflation. I think markets' expectations right now are for CPI to be something like 3.25% over the next year. But it really depends on what happens, both in terms of how high do energy prices get, but also how long they stay high or whether they come back down. Personally, I'm also very focused on what's happening with underlying inflation, core inflation, inflation expectations, and other indicators as well, besides what's happening to energy prices, understanding the broader picture.
Well, what's happening with core inflation?
Yeah, so there I think the story hasn't changed very much. Clearly, higher energy prices does add a little bit to core inflation. You think about airfares, which is part of core inflation, but it is influenced by fuel prices. So I expect that to add maybe a tenth or two to core inflation over the year, the energy price component. But we've seen tariff rates come down. We've seen some other, I think, more positive signs on underlying inflation. So overall, I'm kind of where I've been for a while with core inflation around 2.5% this year.
Well, how long, how high, how fast would inflation have to move to merit a rate response?
Well, I think really it does go back to kind of the full kind of set of factors influencing inflation. And I'm going to bring up tariffs because it is a big part of the story so far about why core inflation has been elevated. So I am watching, imported good prices, looking at core inflation expectations, and then obviously on top of that, what's happening to food and energy. So to my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy though is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Yeah, well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. An unemployment rate probably staying around where it is now, 4.3%. And an economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
Well, you mentioned unemployment. You cut rates in the last year, we were told, basically to prop up the labor market. What is the state of the labor market? Is that accomplished?
Well, it's hard to read all of the tea leaves because it's a pretty complicated situation with the labor market. We are seeing some various kind of different signals. My view is if you look at the unemployment rate, it's today at 4.3%. It's about where it was in July. So we've seen some stability there in terms of the unemployment rate and in job openings and some of the other indicators. So I feel like we've seen the labor market much more stable now. Definitely not a labor market that's weakening based on the economic indicators. That said, if you look at the surveys, including the survey that we do and the Conference Board survey, that's not how people are, kind of feeling about the labor market. Definitely, we've seen a continued process of people being more pessimistic about the labor market. Not about a recession or something, but just a view that this is a pretty low fire labor market, and maybe the views are not as strong as you would think just looking at the aggregate payroll and unemployment data.
You're well positioned to do whatever you need to do to help the economy, but can monetary policy really do a lot in these situations? What's the lag? Jay Powell was talking about it could be a year from now before it hits the economy, whatever you did.
Yeah, absolutely. So monetary policy, based on all the kind of historical evidence, takes about a year to have its full effect on the economy and even longer on inflation. So we always have to be forward-looking. We have to be thinking about where's the economy going to be rather than where it is today or where it's been in the past. So that means trying to think through where is inflation going to be later this year or next year. Where's the economy going to be? Now, I go back to kind of the analysis we've done. I do expect underlying inflation eventually later this year to start coming back down because the effects of the tariffs on inflation will start to wane. I do expect a continuation of the kind of good positive movement in underlying inflation. But we'll have to watch. Does that continue? And again, what happens in terms of the conflict and its effects on inflation?
We're worried about the Iran war. We're worried about tariffs. People are worried about AI. And you mentioned the consumer sentiment numbers. But the economy has been fairly resilient. Why?
Well, I think America has the best productivity, highest productivity in the world. It's got among the highest productivity growth. We are a remarkably resilient, innovative, dynamic economy. And I think new technology is making a big difference, not just AI, but more broadly. We've seen productivity growth that's actually been above par for the past 6 years. So I think there are some fundamentals that are driving solid gains in productivity, in real incomes, and demand for demand to hire people. But there's these various cross currents you mentioned. So again, last year the surprise was the economy was so resilient despite the uncertainty, despite other factors like the tariffs. This year it's another test of that resilience, but investment in AI and data centers I think will continue to be strong this year. And for as long as the economy continues to grow, I think consumer spending will continue to be a very positive factor.
Well, along those lines, what's your read on average hourly earnings or wages or whatever measure you want to use? Average hourly earnings came down to 3.5%. What's the sweet spot? What's a level at which it won't be a concern?
Yeah, I think we're at that level. If you look at all the different indicators, and now we have some very good real-time indicators. We have the standard official statistics. I think pretty much all of them are telling us that compensation is continuing to grow. Real compensation is growing, and it's growing in a way that's consistent with productivity growth we're seeing. So to my mind, the labor market, and whether you look at the unemployment rate and you look at wage growth, these are not factors pushing up inflation at all. So I feel like we're at a good place for that, and I think that's consistent with what we're seeing in the labor market in general.
You've been traveling around the state of New York lately. What are you hearing from CEOs? For a long time, the story has been, we're just sitting there because we don't know what's going to happen.
Yeah, I think that story has changed a bit. When you think about how do you respond to uncertainty, the first thing you probably do is you pause any longer-term plans around hiring and investment and try to figure out what to do. I think a lot of CEOs have said, well, we're past that. So now we just have to navigate a world with higher uncertainty, make the decisions that make sense, make the investments that make sense. And you hear about that a lot with AI and investments in AI. So I think we're kind of in the second stage, if you will, of responding to uncertainty. It's really about, well, okay, we need to make decisions. Let's move forward. And I think that's consistent with what we're seeing. We're seeing positive job growth. We're seeing an economy that continues to grow and invest.
Well, are people talking at all about cutting back?
Well, it's interesting on that. I mean, going to the AI specific question, I think most of the conversation the CEOs, most of them are talking about is really about making smart decisions, hiring people with AI skills, not hiring in areas that may be jobs we don't need because we could use AI. So there's a lot of, I think, thought going into that, but not in terms of, we need to cut back our labor force. Of course, you see this with the data too. We're not seeing high levels at all of initial claims for unemployment or layoffs. So I think it's a low hire, low fire, and low unemployment economy. It's an unusual mix, but I think that's what we're still seeing even today.
The next FOMC meeting at the end of the month is Jay Powell's last as chair, maybe. What's your understanding as the vice chair of the Open Market Committee about what happens if Kevin Warsh is not confirmed by then?
Well, Chair Powell already spoke to that recently in terms of the Board of Governors. I'll speak to the FOMC, the Federal Open Market Committee. I mean, every January we have a vote about selecting a chair and a vice chair, and that vote is in place for throughout the year. So there's no issue of continuity. There's no issue of anything. That's all in place. Typically, we have this vote in January for the chair of the FOMC, or if a new chair is confirmed by the Senate, then that person becomes the chair of the FOMC. But I would just highlight the most important thing here is that we're just focused on doing our work. There's no issue about continuity or things like that at the FOMC. We're just doing what we always do, which is digging into all the data, trying to do our very best to achieve our maximum employment and price stability goals.
So basically, if Warsh is not confirmed, you don't have to do anything. You just continue on.
Exactly. At the FOMC, just continue on.
Now, Kevin has come out and said that there's a lot of things he would like to change, and we won't go down the whole laundry list. But how effective do you think with this FOMC, with this board, can he be in affecting change in the short run? Are we looking at some sort of massive change in the way things are done, or is this going to be a process that takes place over years?
Well, at first, Kevin Warsh understands the Federal Reserve very well. He was a governor. I knew him then. I think he has a keen understanding of what our mission is and the importance of what we do. I can't speak for him, and I haven't, spoken to him lately. But I do expect that when he does get confirmed by the Senate, that he will share his views and perspectives as he thinks about, what he wants to accomplish as chair. And I've worked now with 4 different chairs and many governors and many presidents. And the most, I think the most common element of all this is when people come into the Federal Reserve, they understand the importance of the work we do, the importance of the mission to the American people, and that's exactly what I expect when Kevin Warsh rejoins, if you will, the Federal Reserve.
Now, one of the open questions is what happens to Chairman Powell when he's no longer chairman but still a governor. Would you like to see him stay on?
Well, that's a decision for Chair Powell, and I don't have any comment on that. I leave that to him.
Well, we'd like to thank you very much for talking with us this morning. John Williams, the president of the New York Fed and vice chair of the Open Market Committee. We'll send it back to you.
Michael McKee, thank you so much. A great interview as we look to a question of what the Fed does with a real kind of stagflationary shock, talking about a potential risk to growth. As Fed President Williams talked about bringing down the growth forecast to 2% and 2.5% so far this year, but also talking about an inflationary shock that potentially could be something they can just look through.
Yeah, exactly. Saying that the story of underlying inflation hasn't changed. So there you have someone from the Fed more worried about what's happening to growth. Kelsey Barrow was talking about this idea that the next likely move is a cut, but still there is this idea that maybe there are more Beth Hammocks in the world who are looking at two-sided risks.
We'll parse through that coming up with David Seif of Nomura with that focus on inflation heading into data later this week. And Bloomberg's Tyler Kendall will join on President Trump's latest threat to Iran in a Truth Social post from New York. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices, both in terms of how high do energy prices get, but also how long they stay high or and whether they come back down. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes.
That was New York Fed President John Williams dealing with the same headline roulette the rest of the market is. Right now, the market inflected lower ahead of that 8 p.m. deadline later today after a series of threats. President Trump threatening to wipe out a civilization should there be no agreement, although he is still optimistic. We heard from Vice President J.D. Vance speaking in Budapest that the war on Iran will conclude very shortly. We're seeing lower S&P futures lower by about 0.5%. Gold fluctuating here. Oil steadily higher throughout the morning. Brent crude at $110.98. The Federal Reserve looking to see how higher oil prices are weighing on inflation with CPI data due on Friday. David Seif of Nomura writing, we expect the Fed to largely look through the Iran war. We think the Fed will cut rates twice this year in September and December under Warsh's more dovish leadership. David joins us now with a really interesting framing, suggesting it's not necessarily a Fed that is cutting because inflation is disseminating, but rather because they are politically pushed to do so.
Well, yeah, good morning. Yeah, we really think the Fed's reaction function is going to change once Warsh comes in. And so under the Powell leadership, which we think has been fairly dovish in its own right, it doesn't look as though the situation is setting itself up for additional cuts. But of course, Powell is not going to be Fed chair for the rest of the year. I think the real question that comes into this is a Fed chair transition unlike one we've seen in almost 50 years, really since Volcker came in and fundamentally changed what the reaction function was. So Warsh is going to come in and presumably, we expect, want to be significantly more dovish than Powell has been. And the question is, does he have the votes to get through what he wants? You know, the FOMC is a voting committee. And since the time of Volcker, really more than 45 years ago, it's been a de facto dictatorship from the Fed chair. What the Fed chair wants, the Fed chair has gotten. I suspect, and we suspect at Nomura, that Warsh is going to want even more than 2 cuts. We also suspect that the core of the committee does not want to cut probably even that much. So where is that going to end up? If the core of the committee just puts its foot down and says, that's it, we're not going to give you 7 votes, then maybe we won't even get those 2 cuts. And if Warsh is able to really convince them and push them into doing that, we could even get more. But again, the key thing is that our view is based on the Fed cutting because we think its reaction function is going to change, not because we think inflation is coming back to target or growth is going to weaken.
What does that mean for inflation then? If we're cutting for those reasons and an inflation that's been above the Fed's 2% target for the past consistent 60 months in a row?
Yeah, I mean, we look like we're going to have a 6th consecutive year of above 2%, above target inflation. I think that what it really, the key thing here is how much does the committee ultimately show independence? I think that if the committee allows, say, 2 cuts to go through, even if those don't necessarily seem appropriate to many market participants, but then says, okay, Now we're done. Now we're not going to give you, Chair Warsh, the votes anymore to get this done. I actually think that shows a lot of credibility. You know, there are on paper guardrails at the Fed that have not been used or been needed to be used in almost 5 decades. If those are seen as still functioning, I think the market will actually take that pretty kindly. They say, okay, well, maybe you shouldn't have cut that 50 bips, but you're not cutting 200 bips, and that's great. If those guardrails don't work, then I think that's perhaps much more dire for inflation expectations going forward.
There's news coming out this morning that Delta Airlines is increasing its price tag for checked bags by $10 to $50, depending on the bag. This follows what United has done, what JetBlue has done in terms of trying to offset the increase in oil prices. How much do you think people are underestimating just how inflationary this oil price increase actually will be?
I think there's a pretty good estimation of it. So I think airline fares and the associated fees are actually one of the very few key ways in which oil price increases translates into core inflation, which is what the Fed targets. And we in the consensus do not see March core inflation being all that much higher than it was in February. Headline inflation is a totally different story. And of course, consumers do not really care about whether it's classified as headline or core. So we see a full % month-over-month increase in headline inflation for March, and that is driven almost entirely by what we think was a close to 23% month-over-month increase in gasoline prices. We still haven't seen any real impact on food prices, nor do we expect to see it in the March CPI. So obviously gas prices could keep going higher, but then there's the other leg. If food prices start to move higher as well, which seems plausible, although we haven't seen it yet, then headline inflation could continue to get much and much higher. But when it comes to core inflation, we don't actually think these increases in oil prices will have all that big of an effect on things. And it's really the crux of why we think the Fed will and probably should look through the higher oil prices.
David Seif, thank you so much for being here
My
with
pleasure.
us today. David Seif of Nomura here with us in New York. What a morning it has been. Had the focus completely on that 8 p.m. deadline, a real lack of certainty about exactly how to read some of the headlines that we've gotten throughout the morning. Danny, questions about strikes potentially on Karg Island, and then, of course, the Truth Social post from the president.
The president warning that a whole civilization will die tonight, but also goes on to say that there has been a total regime shift and that he is speaking with maybe a different and more rational regime. So it is this carrot and stick, this mixed message, having very extreme language of the kind of destruction that he will promise if 8 p.m.'s deadline is not met, but then some optimism too, which we also heard from the vice president saying that very shortly this war will conclude.
In the meantime, stocks dipping slightly in early trading as they try to get their head around exactly what to pay attention to. Coming up tomorrow, we've got Julian Emmanuel of Evercore ISI, Alex Altman of Barclays, Emily Rowland of John Hancock Investment Management, and Tom Porcelli of Wells Fargo. This was Bloomberg Surveillance. Good morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
All right, good Tuesday morning, 30 minutes until the start of trading. Futures are down. I'm Matt Miller. Coming up, deal or destruction. President Trump ramps up threats to wipe out Iran as the clock ticks on his latest deadline. Meanwhile, tech is looking increasingly attractive for investors, with Goldman Sachs and Ed Yardeni pointing to the sector's resilience. Plus, Bill Ackman makes a hefty bid for the world's largest music company, home to Taylor Swift as well as Drake. Let's take a look at some of these stocks that are moving in the pre-market this morning. Just half hour until the start of trading, and Broadcom is up 3.5% right now. Google gaining only 0.25%. This after Broadcom announced a long-term agreement with Google to supply AI chips. The company also confirming plans to work with Anthropic to help power its operations. And shares of major health insurers are rising after the U.S. government said it would pay private insurers offering Medicare plans nearly 2.5% more in 2027. You can see United Health Group up 8%, Humana up 10%, and CVS gaining almost 8% as well, even after President Trump in a briefing or maybe it was like a prayer ceremony in the White House last Thursday said the U.S. government can't afford to pay for child care and Medicare and Medicaid because we're a big country and we're fighting a war right now. Let's get back to that story. President Trump has been escalating threats to Iran just in the last hour, warning that an entire civilization could die tonight if there's no deal by 8 p.m. Eastern. He says, I don't want that to happen, but it probably will.
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil and everything else. I would say it's a very big priority. We have a concept where we'll charge tolls.
And the U.S. weighs its next move, with the vice president also speaking abroad, saying that the conflict will end shortly. And Bloomberg Economics setting out 4 options of what might happen tonight, ranging from a diplomatic breakthrough to a major U.S. military operation. Joining us now is Becca Wasser, defense lead for Bloomberg Economics, who led this analysis. She's also conducted war games for the U.S. Department of Defense. Becca, first, your thoughts on this Truth Social post from the president using extreme language, talking about a complete wipeout of a civilization, but also going on to say that there has been a regime shift with more rational people to negotiate with in Iran.
The administration is both trying to say that it's been mission accomplished in Iran while still retaining the ability to threaten Iran to try and come to the negotiating table. It seems more and more likely that the White House is looking for an off-ramp here, but it needs one that allows them to maintain that they have had absolute victory here. And I think that's what we're seeing, this continued threat, this continued pressure as they are in this crunch time for potential ceasefire negotiations, but that might eventually lead to an opportunity for President Trump to walk away and say that he achieved all of his objectives in Iran, whether that is the case or not.
Is that why, this semantic inflation, he says in his tweet, he's achieved complete and total regime change. And he's been repeating that often. It reminds me of the line in Hamlet when the queen says, "Methinks the lady doth protest too much." Does anybody else in Washington, Becca, think that we've achieved regime change in Iran, where the IRGC and the theocratic structure still exist?
I mean, just look in Tehran. You replaced an Ayatollah Khomeini with an Ayatollah Khomeini. It's the same part of the leadership. It's the same structure. It is the same system. And that's because airstrikes and air power were never going to be sufficient to force regime change. That hasn't been the case historically, and that most certainly isn't the case right now.
But why does he insist that it is? Is it just a better justification for the U.S. and Israeli attacks?
I think for President Trump, there's been a number of objectives about the war that have been shifting over time. You'll remember that in the first days, initially, some of the objectives were around this idea of regime change. Since then, they've become a lot more operational in nature. Objectives like trying to eradicate Iran's navy and missile and drone threat. And there, too, those threats haven't been eradicated. So there is a little bit of revisionist history happening in real time right now, where President Trump is trying to claim victory and trying to claim that those objectives have been achieved, even if that isn't the reality on the ground.
All right, Becca, thanks very much. Becca Wasser there from Bloomberg Economics. Let's turn now, and it's a hard turn, to tech. Broadcom rising in the pre-market after announcing a long-term agreement with Google to supply tensor processing units. Let's get more with Bloomberg Tech's Ed Ludlow. I guess this is something that isn't really moving the dial much with Google, at least those shares, Ed, in the pre-market up only about 0.2%.
Yeah, I mean, the interpretation of the market is that this deal is a vote of confidence in the TPU architecture and, further evidence that Broadcom over a longer period of time can close the gap on NVIDIA. So there's an existing arrangement between Anthropic, a leading frontier AI lab, for 1 gigawatt of TPU-based capacity. This more than triples it to 3.5 gigawatts. They have this goal to secure 10 gigawatts of capacity by the late decade, end of the decade, and currently have 1 gigawatt apiece from Microsoft AWS, which is Amazon's cloud unit, and NVIDIA, and there's like a complicated web of investment. But what's true of all the frontier labs, Anthropic, OpenAI, others, is that they are compute constrained. If they have more compute, they could offer more products. And with Anthropic, it comes hand in hand with evidence that their financials are really taking off and that they are growing with demand like a rocket.
Yeah, talking about an annualized revenue, a run rate of over $30 billion, which run rate is always kind of annoying because it's kind of marketing-y because you're annualizing that. But that would be above OpenAI. Ed, just how much is Anthropic catching up right now to the other LLMs?
Yeah, I mean, Anthropic's earlier story was very much focused on enterprise. They didn't go after the sort of consumer North Star that OpenAI did with ChatGPT. And so a revenue run rate of $30 billion is notable in particular because it was at about $9 billion at the end of last year. And they have had some traction with the enterprise. They've also, of course, had issues of litigation with the Pentagon, where the Pentagon has said, we will use your technology how we like. But that new revenue run rate data is also being interpreted by the market and by our readers as evidence that this fallout with various arms of government, but the Pentagon principally, isn't impacting their ability to do business, at least with the public sector.
Okay, Ed, thank you very much. That's Bloomberg Tech's Ed Ludlow. on the latest, on the tech giants. And Matt, we have seen a market, Goldman Sachs, for example, pointing out that the Mag 7 have been lagging behind. They're now cheaply priced. It's time to jump in there and time to buy them. They had been companies that had been hit, but maybe the start of the war, again, they do become something of a safety sector.
In fact, I was talking just this morning with Sitara Sundar.
Oh, yes?
At around 5 a.m. about this very issue. And I looked up, for example, Microsoft shares. They were down and have been down 22% so far year to date. So it's pretty shocking to see such a company with such a steady revenue stream losing a quarter of its value in the first 3 months of the year.
Yeah, I have to say one of the kind of like ironic things is also that in the Mag 7, Apple has done incredibly well. One of the ones that hasn't spent on a lot of the big tech. Exactly. The narrative has really shifted. Away from big tech, we are looking at shares of health insurers that are soaring. Medicare will pay private insurers 2.5% more in 2025 versus an improvement versus initial rates proposed in January. John Tozzi covers the sector for Bloomberg News. John, 2.5%, just how big of a difference will that make for the health insurers?
Yeah, so the thing to remember here is we're talking about roughly $500 billion of spending that flows through these private companies. So, a percentage point or two here makes a lot of difference. When the government initially proposed the rates in January, they essentially said they were going to be 0% increase, tiny, I think it was 0.12%. For 2027. Then you have 3 months of lobbying basically by the insurers to get that number up. They landed at about 2.5%. It was way above, or meaningfully above street expectations, were probably around 1%. So it is a positive for these companies. But even with the share pop we saw post-market yesterday, the big ones are still sort of below the price level they were before the initial proposal in January.
John, I'm sure you saw the statement from the president last week. I think it was Thursday when he was meeting with his pastor who was comparing him to Jesus. And he said, we can't afford to pay for childcare. We can't afford to pay for Medicare and Medicaid because we're a big country and we're fighting a war. That seems to fly counter to this new story that we're going to, in fact, not only pay for it, but pay even more for these drugs.
Yeah, and just to be clear, this is for healthcare for private Medicare plans, not just drugs, so all sorts of services. What the industry says is that, the costs are rising. Their, cost of caring for people are increasing, so they need the government payments to keep up with those costs. That the insurers are sort of, otherwise that it's not sustainable. What we heard yesterday from Medicare officials was that they are trying to balance sort of near-term stability in the program, so to keep insurers in the market, keep them offering plans, with the long-term sustainability in terms of the financial aspect. So, this is better for industry than the original proposal, but like going back, to the period of the first Trump administration, you'd often see, 5% or more increases. So it's not sort of as beneficial to the insurers as they once had.
All right, John, great having you on the program. John Tuzzi there covers insurance for us. Let's get a quick check on what's going on in these markets. In terms of futures, S&P futures now down. They had been down for most of the morning, turned higher around 4 and stayed there for a while. Now we've turned lower after President Trump's latest Truth Social post. You can see NASDAQ futures off 0.6% now, and crude now showing significant gains with NYMEX crude up to $115.22 a barrel. Still the May contract.
Yes, yeah.
Right, and the June contract is the front month for Brent, which is why it's trading at less than that at $110.
It's still notable to point out because that is a big uptick in price, and the backwardation between that contract and 6 months out is the most extreme on record. Some big pricing in this oil market that maybe isn't totally necessarily reflected in other risk assets. Some of the other movers on our radars this morning, I mentioned Apple, those shares down 1%. A report that the foldable iPhone is hitting engineering setbacks and could see shipment delays.
Hard to fold. Novo Nordisk is pricing its new high-dose Wegovy shot at $399 a month for cash pay payments. That's about 40% less than what Eli Lilly charges for most of the doses of Zepbound.
And Delta boosting fees for first and second checked bags. by $10. It will report earnings due out tomorrow, but following in the footsteps of JetBlue, United, and others, trying to get more fees where they can.
Coming up, billionaire Bill Ackman pitches a $65 million deal to take over Universal Music Group, the label of Taylor Swift. More on that next. This is Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
World's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Let's get now to high interest. Look what's making $65 billion deal for Universal Music Group, the world's largest music company. Pershing Square Management is offering $10 billion in cash plus shares and pushing for a long-delayed U.S. listing. Ackman says the plan could unlock about $16 billion for buybacks and growth, but without support from UMG's top shareholder, the deal could very well fade to black. Is that a Metallica reference? Is that?
Yeah, I'm going to assume they own Metallica, or, you know, they're the label for Metallica, right?
I see.
Yeah,
okay.
yeah, they are.
Very cool.
They are.
Very cool. To whomever wrote that.
Well done.
Nice job.
Well done. Joining us now to discuss more is Bloomberg senior strategist Neil Campling. Neil, why even go after this target if it has a controlling shareholder?
I think that this is a
a deal that's kind of born out of frustration, if you like, with the performance of UMG shares. It's a transaction that's been described by some as very smart by Ackman, but also highly misleading. And misleading in terms of, as you referenced, there are some core shareholders here who are unlikely to vote for such a transaction. So what it does is it helps underline that there are probably some better value creation opportunities here for a label that owns, you know, extremely valuable content, but also at the same time it is kind of suggesting perhaps that the offer as such is not quite at the premium that it turns out is being offered because of the complexity of the structure of the transaction. And it has some very, should we say, generous assumptions in the valuations. For example, the valuation is a 25 times price earnings multiple is assumed in the valuation of where the stock will be goes forward. Now, that there's no European media company that trades on anything like that kind of multiple. And also, Universal, because of the catalogue and the investments in new content, and having such artists as Taylor Swift as one example, their cash conversion is much lower than many media companies. It's about 2/3 of the cash generation. So there are, you know, a lot of sort of issues underneath the hood, if you like, in terms of what this value that such a deal could actually really be.
By the way,
if it even comes to fruition.
I remember when President Trump tweeted simply and in all caps, "I hate Taylor Swift." And Bill Ackman, obviously a big supporter of President Trump, so it'll be interesting to see what she thinks of this acquisition. Maybe better than Scooter Braun. The French shareholder Vincent Bolloré owns what, 18.5% of this company, and then his family owned. Vivendi owns another 10%, so almost 30% that he basically controls. Do we know what he thinks?
We've had no comment thus far from those shareholders. Certainly, if you look at the last EGM when proposals have been made, the proposals made at the last EGM were voted down, and most people that I've spoken to who are close to the situation suggest that they would vote against such a transaction. So it does feel like this is highlighting a frustration from Ackman and activists who want better value. And clearly, you know, there's a big discount to the offer, 40% to the offer price in principle, which suggests that most shareholders think that this offer is basically DOA, dead on arrival, and has very little chance of success of getting through any kind of EGM that would take place as a result of the offer.
All right, Neil, thank you very much for that. That is Neil Campling out of London on the latest from Ackman. Coming up on the show, we're going to speak with Ann Maletti of Allspring as President Trump puts on Truth Social, escalating his threat of an 8 p.m. deadline, warning of total civilization destruction. We catch up with Ann ahead of the deadline. This is Bloomberg Open Interest.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujin report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
To the minute geopolitical news whenever and wherever it's happening.
I'm Anna-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Oil markets gaining and futures giving up earlier gains, first on reports that there were U.S. strikes on Carg Island, and then this from the president putting on Truth Social saying a whole civilization will die tonight, never to be brought back, but going on to say that there has been a total regime change with smarter, less radical minds, maybe something revolutionary and wonderful can happen. Let's get the view from Wall Street. Ann Miletti, Allspring Global Head of Equity Investments, joins us now. Ann, 8 p.m. ET tonight. It is a huge event risk, and President Trump only ratcheting up some of the rhetoric that he's using. What do you do with this?
You know, Danny, this is a tough one for all investors. As we know, President Trump likes to negotiate in the public, right? So we have to deal with the Truth Socials, the tweets that go out all of the time. And I think most fundamental investors pay much more attention to what's happening at the company level. And so we're focused on that, obviously focused on earnings season, and really trying to assess if this is just an inflation scare or if it really is going to eat into the future prospects of growth for many of our companies.
What do you think we're going to see? I mean, in terms of earnings, right? We're still expecting double-digit earnings growth from the S&P 500, even after watching oil go from below $60, and I'm talking about NYMEX here, to over $115 a barrel. So it's essentially doubled. Is that not a big input cost for these companies?
You know, Matt, you're targeting something I was just looking at this morning. When you look at earnings estimates, especially as you progress out into the second half of the year, the growth rates for earnings are still remarkably strong. And so, again, I don't know that investors will care too much about what companies report, but they will care about what management teams are saying about the rest of the year. And there will be some sectors and certainly many companies that are impacted by input costs. And it's not just gas and oil, but certainly other materials that are impacted by this conflict as well.
Hey, and you're going to stick with us through the opening bell. That's Ann Miletti of Allspring with the start of your cash equity trading just moments away, less than 5 minutes, as we head lower after 4 consecutive days of gains. That starts to undo itself as these markets try to understand how it should be prepping for an world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We are moments away from the start of trading on the New York Stock Exchange, on the NASDAQ market site, and across the U.S. You can see futures are now down 1/3%, but we've seen, I think, 4 days, Danny, 4 days in a row of gains in the cash trade. So if we turn around, this could be 5, and we have been at some points throughout the day up. It was only after President Trump posted something on Truth Social about the destruction of an entire civilization of nearly 100 million people in Iran. Greenland Energy Company ringing the bell at the NASDAQ market site, and they've only been trading for a couple of months, managed to lose 40% in that time of the value of the company. But of course, there's a war in the Middle East now. We should just take that company. Oceana Gold is celebrating its listing at the New York Stock Exchange, where it's long been listed. And I took a look at the comp chart. Over the last 5 years, this company has gained 550%. Not hard to believe, obviously, with the underlying asset, but massive, massive gains. Even this year, they're up 12%. So the chart looks like this, but still a 12% gain in 2026 with the S&P down 4 is not bad.
True, and I guess, again, just reflecting the crazy ride that gold has been on. I'm looking at tech stocks here at the open mat, specifically Broadcom and Intel. Broadcom, they announced a long-term agreement with Google to supply AI chips. They also confirmed plans to work with Anthropic to help power its operations. So 2 good things on the ledger for them, up 3.2%. And then there's Intel saying that it will join Elon Musk's Terafab project with SpaceX, xAI, and Tesla to help refactor silicon fab technology. Hopefully you can tell me what that is, Matt, because I don't totally know. But anyway, Intel up 2%.
I don't honestly know the details of that. However, the expert to whom I go on all things, the experts, the 2 main ones here at Bloomberg to whom I go on all things chips and AI and rockets as well, Ed Ludlow and Mandeep Singh are going to join us in just a little bit. So they will help us. Great. They will help walk us through that. Now, shares of major health insurers are rising after the U.S. government said it would pay private insurers offering Medicare plans nearly 2.5% more in 2027. We just talked to John Tozy about that, and he points out that during T1, it was a 5%, more like a 5% increase. However, I suppose when you consider that just last week the president said we can't afford to pay for Medicare and Medicaid, 2.5% looks a lot better than nothing. So United Health Group up 10%, Humana up 10%, CVS up 5.25%, some big gains there. And Mileti Allspring Global head of equity investments, back with us. And I just reminded myself of the president's budget. Now, often the White House floats a budget at first that doesn't pass completely, but maybe get some traction, and he wants to spend almost 50% more on the military, $1.5 trillion. That's why we can't pay for childcare and Medicare. But does that make you instantly want to invest in the defense industrial base because they stand to benefit the most?
You know, what's interesting, Matt, is we've had some pretty strong overweights in the defense stocks leading up to this war, and that was a really good call. They've been a little bit underperforming during the conflict. And so, again, the magic question is, can he get the budget approved, and can we get that much funding into the defense stocks? I do think, given all the uncertainty in the world, defense stocks are a good place to play overall, and investors will continue to hold a good amount of weight there.
And I'd love to get your take on consumer stocks. There's a really good story by Katrina Peterson this morning about Doritos, the PepsiCo company. Essentially, they had long been told by the Walmarts of the world that your products are too expensive. It's a consumer that's in a pinch. They resist, and finally they slash prices by 15%. Only now for them to think, oops, is this a mistake? Because now we're going to have even more of a margin squeeze as oil prices and energy prices go up, logistics is more expensive, and a consumer that is still feeling the pinch. What happens to the PepsiCos of the world if we continue and get a sustained energy price spike and a consumer that has to deal with that inflation?
Yeah, Danny, this is the million-dollar question. And I think as we're headed into earnings season, again, some of the questions that we'll be focused on asking the management teams is how they're going to deal with the impacts of a longer duration conflict than we first believed, right? What if this extends another quarter, another 2 quarters? How much damage will it have done to the 2026 estimates in their mind? And then how much dislocation also within the supply chain, and what are they doing about it? So certainly the consumer staples, the consumer discretionary stocks, all of those are impacted. Now, some of them have been winning because of what they've gotten from the high-end consumer who's been able to kind of muscle their way and spend throughout this. But certainly the low-end consumer has been suffering. And, one of the things that we were excited about at the beginning of the year was that middle to lower end consumer getting bigger tax benefits or a bigger tax return. And that's kind of been washed away now with the increase of fuel prices. And so, again, and you're seeing more inflation with both food and fuel. So, that consumer is in a pretty tough position right now.
What do you think about the tech companies? And we've been talking about some of these companies that have lost so much value. Goldman Sachs has written about it. And I just looked at Microsoft down 22%. Not to talk about specific names, but just this whole group with amazingly resilient annual recurring revenue has just been sold off. Does it make sense to you?
In some ways it does, Matt, because we know that the innovation cycle with AI is real and that companies are going to continue to invest. This CapEx spending cycle doesn't look like there's any signs of slowing. There is, again, from the One Big Beautiful Bill, incentives for companies to continue to spend. So we would expect that to happen. And, when you get a 4 multiple point decrease in technology stocks, which appear likely to have still good earnings and free cash flow growth, it starts to get more attractive to investors. And, technology has been acting like the new defensive sector, and it looks like investors are kind of turning back in that direction. I would just have a little bit of caution that they may be too impacted by some of the supply chain impacts that we're seeing because of this conflict. Helium is needed for semiconductors. About 30% of that comes from the Middle East. And so, again, depending on the duration of this conflict and the damage that's created, you could start to see some of those material costs or dislocations even impact technology.
And really wonderful to have you on. We appreciate your time. Ann Maletti of Allspring. And let's get a check on the stock market right now. Is it an escalation day? Is it a back down day? After the recent post from the president talking about a complete destruction of civilization, we continue to lose steam in this equity market. Not a huge reaction. We should just point out that, especially after a 4-day run up. We are only down 0.4%. The majority of stocks are down, not a great breath, but helping us out is Broadcom, an agreement with Alphabet, United Health Group, after some Medicare changes, a 2.5% boost to what the payouts they'll get for private plans. Alphabet, Intel also partnering with SpaceX, Alphabet, Chevron. So the energy company's doing well. To the downside, a bad day for Apple after reports that their foldable iPhone is hitting some snags. Eli Lilly also down, facing some competition from cheaper drug pricing from Novo Nordisk. Nvidia, Microsoft, J&J also down this morning. Looking at the individual groups, again on a day of fears of geopolitics, it's the classic trade we've been seeing, and that is energy stocks moving higher alongside the price of oil. Those are up more than 1%. On the downside, you have consumer discretionary, healthcare, and consumer staples. So a lot of consumer-related names falling this morning, Matt, with the overall index, again, down just 0.4%.
All right, coming up, we're going to get an explanation into the Intel Terafab project with SpaceX, xAI, and Tesla for chip production. Ed Ludlow joins us, as well as the head of our technology coverage at Bloomberg Intelligence, Mandeep Singh. This is Bloomberg Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The
The rhetoric of escalation is very clear from this president, talking about a complete destruction of a whole civilization if Iran doesn't come to the negotiating table by 8 p.m. tonight. But it's a carrot and stick, also talking about a complete regime shift that maybe makes them more reasonable. Either way, we are selling off this morning, down 0.5%, down 0.6% for the NASDAQ. Not huge numbers, but we are looking at Brent crude. It's been fluctuating now, up 0.7% at $110 a barrel and 50 cents. Your top calls this morning. The analyst action we're following. UBS, they upgrade Morgan Stanley, highlighting its strong profitability and upside from deal making and IPOs. The analysts say that its wealth business is well positioned to benefit from AI, but financials under pressure this morning, down 0.6%. Citizens, they upgrade Rocket Lab. They call it a good entry point with strong upside. The firm says that SpaceX IPO could shift how investors view the company and points to U.S. space spending as a tailwind. Shares plummeting, down 2.2%. Seaport Research, they are double downgrading KB Home to a sell as it warns that housing activity is set to slow even more. They're shifting its view on builders, citing weaker growth of jobs. It's also cutting D.R. Horton, Lennar, and Pulte Group, although shares falling in today's trade, Matt.
All right, so there's some movement there. Let's turn, though, to another sector, and that is technology. Intel says it will join Elon Musk's Terafab project with SpaceX, xAI, and Tesla to help refactor silicon fab technology. For more on what that means, if I even read it correctly, we welcome Bloomberg Tech co-host Ed Ludlow, as well as Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. Mandeep, I'll ask you first. Yeah. What does it mean to refactor? What did I say? Refactor?
I don't even know.
Silicon technology. I mean, what does that mean? They're just going to build factories?
Well, clearly everyone realizes that the biggest constraint right now is the TSMC capacity when it comes to making these chips. And Intel, I think, by partnering with xAI and SpaceX, is really trying to make that play that they want to be that fab where, Musk manufactures his chips. I mean, with that being said, we saw that Broadcom deal. And to my mind, it takes 6 to 7 generations of a chip to get to a point where you can produce it in mass scale and really use it for a productive use case. Even if, SpaceX and xAI are doing this, it's going to take multiple iterations. And that's where I think what NVIDIA has done or what Google has done with TPUs, they have such a head start when it comes to doing these leading node chips.
And so, Ed, let me bring you into the conversation. What difference does it make for Intel now?
Yeah, to refactor means basically, in layman's terms, to modernize and improve the chip manufacturing process. And so that is Intel's pitch, that they would come in with the knowledge and expertise of having scaled output across various nodes. The difficulty is that right now there is a lot of unknown about the Terafab project. It's not reflected in Tesla's full-year capital expenditures forecast, for example. And their goal of 1 terawatt of compute capacity is basically many factors greater than all of the current global capacity from TSMC and Samsung for lead-edge nodes, lead-edge manufacturing of AI chips. And so there is a great question mark of how they'll do it, but like analysts have estimated, you're talking over an aggregate period of like trillions of dollars of spending to get to that scale in the end. So if this was something that we were chasing, and it's interesting that Intel notes in its post, Intel, that Elon Musk visited with them over the weekend in Santa Clara. Very interesting indeed.
Ed, Intel has obviously sold a stake, or President Trump in the United States have bought a stake there. So they're, in bed together. I'm never sure about Elon Musk, but at least at one point he was very deeply in bed with President Trump. Is this whole sort of clique going to help Intel recover from its incredible fall to get back to what it once was?
Well, no, because if you think about the pathway of an AI chip through a fab, it goes through many processes and touches many hands, many machines. And those machines come from Lam, KLA, Applied Materials, and ASML ultimately when it comes to lithography. Intel may well help the Terafab project, which is a JV between Tesla, SpaceX, and xAI, with the planning, right? The structure of this project. But the spending is going to be on others. It's going to be on the chip equipment makers, not necessarily on Intel. And Intel's story to date, very simply, is that it has not been able to scale or find customers other than itself for its lead-edge processes. There isn't any evidence that its next-generation nodes have high-volume throughput yet. And so that's not immediately clear that they'll be able to translate what they will say as expertise and experience to Elon Musk's project anyway.
Mandeep, if I can bring you back in on a different story, this Broadcom-Google partnership, what exactly is it and why do we care?
Well, and just to put it in context, so in this case, the fact that we are talking about Intel, a Broadcom is making almost $37 billion from 1 gigawatt of Anthropic's orders, whereas Google is capturing maybe 13 to $14 billion of that, simply because Broadcom is the chip design and networking company that is helping Google GPUs scale their designs and use that for Anthropic, which we know has scaled from $9 billion to $30 billion run rate over a span of 4 months. So this kind of growth is, not seen before. Nothing that I can recall when it comes to software companies growing like that. And I think if there was more capacity available for Anthropic right now, they would grow even faster. So they are really going to Broadcom to scale the TPU designs. And in the process, Google ends up generating some high margin IP revenue without really getting into chip design or networking, which is what Broadcom ends up doing. But Google does capture a share of that economics because it's their IP that Broadcom is using for TPUs.
Ed, while we're on the subject of leading edge chip design and AI and somehow competition between the U.S. and China, I noticed U.S. lawmakers have put forward some legislation that would restrict these highly technical machines. I think they're called deep ultraviolet lithography machines being sold to China, which was a hit to ASML stock in the European session. What do we know about that?
Yeah, because the logic being that right now, China has its own domestic chip makers, Fabless, they design chips, and then it has SMIC, which is a chip manufacturer. And what America, particularly lawmakers on Capitol Hill, have been tracking is SMIC's ability to go it alone. It cannot do that without the current critical technology, which is EUV. And so that is the next choke point, right? If you ban the export of lead-edge chips from the United States to China, it creates a vacuum. To prevent that vacuum being filled by a domestic champion, you also have to assess the supply chain for chip manufacturing and stop a domestic chip manufacturer, SMIC being akin to TSMC or Samsung, from having access to the gear or equipment it would need to accelerate its own ability to make leading-edge chips, essentially.
Ed, thank you very much. That's Ed Ludlow of Bloomberg Tech and Mandeep Singh of Bloomberg Intelligence. Thank you as well. Coming up, Blackstone raises $10 billion for an opportunistic credit fund, its biggest ever. They bet that market turmoil will present an opportunity for them. We're going to have the details. That's coming up next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Shares of Blue Owl looking to recover this morning after it closed at a record low yesterday. Some other pieces of news out there. Goldman doesn't hit the 5% redemption limits, but gets very close to it. Blackstone raising an opportunistic credit fund for the latest. We're joined by Bloomberg senior reporter Silas Brown. Silas, amidst all of the noise, you have these, let's call them bright spots of Goldman, not necessarily getting the full extent of the redemption request and saying now is a great time to invest. Blackstone raising a $10 billion opportunistic fund. What separates right now the haves and the have-nots?
Yeah, so I think you'll see a lot more of this going through the next few months, these kind of front-footed responses from the likes of Goldman and the likes of Apollo and Blackstone, where they'll be pointing out that this is going to be a good time to invest. Like private credit likes volatility, but not too much volatility. And I think that's how they're going to be pitching themselves to investors. Kind of like, this is a somewhat volatile time, but not too volatile for it to be an existentially volatile time. So that's one part. I think the Goldman story, the Goldman BDC story is really interesting. And I think this is also something that we'll see more frequently, certainly I'm asking about, is what's the type of retail investor that a private credit fund has oriented themselves towards? Is it a retail investor that is kind of super flighty, namely doesn't really have much interest or knowledge of private credit as an industry? Or is it a sort of retail investor that has more of a kind of diverse portfolio already and also maybe kind of understands sort of private markets, more kind of readily? And I think that's how you'll see some different types of redemptions coming forward in the BDCs to come.
Well, it makes sense that if we've seen a few vintages that were not good because they were more lax underwriting standards, and we were in a near zero interest rate environment, then this vintage will be better as retail flees, because we're looking at things through a much stronger microscope, and rates are higher. Does that track? Because that's what Danny and I hear on this show all the time.
Yeah, I think it tracks to a certain extent. Like I certainly see the logic in it, and I think there is sense to it. I would also just point out though that the private equity deal machine that private credit kind of really thrives on is still pretty clogged up, and we haven't yet seen this kind of wave of deals yet. And I mean, private credit can only kind of prosper if it has areas to deploy in. And I think from what I can gather from a lot of fund managers, the problem is really, or one of the problems really, is deployment at the moment. Where to lend your money.
All right, Silas, great having you on the show. Silas Brown there covers private credit for us out of London. Coming up the next hour, Matt Maley joins us. He'll talk about private credit as the canary in the coal mine from Miller Tabak. As traders brace for President Trump's Iran deadline, Jeff Aronson of Centerbridge as well, also on private credit.
don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. President Trump has made his harshest threats yet against Iran as his 8 p.m. deadline nears for reopening the Strait of Hormuz. He warned on social media today the whole civilization will die tonight, never to be brought back again if Iran doesn't capitulate. CBS's Olivia Rinaldi is at the White House.
He says he doesn't want it to happen, but it probably will. And then he goes on to say, now that there's regime change, they're hoping that less radicalized minds will prevail and maybe something wonderful will happen. But who knows?
The president's already threatened to blow up Iran's power plants and bridges. Correspondent Elizabeth Palmer reports from Tel Aviv.
People are just plain terrified. They're staying home. There's been a lot of hoarding of groceries in case there's so much damage that food can't get from the countryside into the cities. And people who have been able to leave the cities have just gone.
U.S. oil prices have jumped after reports of U.S. and Israeli strikes on Iran's Karg Island terminal. Vice President Vance is in Hungary in a bid to boost Prime Minister Viktor Orban's re-election bid. CBS's Michael Wallace.
Vance touted Orban's work with Trump to try to end the war in Ukraine.
And they've done it through diplomacy.
Orban, heard through an interpreter, praised Trump.
If President Trump were the president in 2022, there would not be a war now.
Orban accused European Union leaders of interfering in Hungary's election to hurt his chances.
NASA's just released a photo of EarthSat, shot by the Artemis II crew as they loop the moon. CBS's Mark Strassman.
EarthSat is the Earth slipping below the lunar horizon. And at that point, that is the point from last night when the crew would have lost line of sight with Earth, which would have meant that there would be no radio communications.
More than 57 years ago, the Apollo 8 astronauts captured an iconic shot of Earth rise. Britain's yanked the welcome mat for an American rapper. CBS's Vicky Barker.
I'm Vicky Barker in London, where immigration officials have just announced Kanye West has been refused permission to enter the UK, where he was due to headline the 3-day wireless festival this July. This after multiple objections like this one from the head of Britain's biggest Jewish organization.
A man who has repeatedly made appalling anti-Semitic statements, including Holocaust denial, has got no business performing at a festival in London.
The festival's just been canceled. A rap star is hospitalized near Miami. Offset is in stable condition after he was shot outside the Seminole Hard Rock Hotel and Casino last night. Police say 2 people have been detained. This is CBS News. Dangerous snake bites are on the rise in the West.
6 people have been bitten by rattlesnakes in Southern California in recent weeks. 2 of the victims have died. 14-year-old Bailey Vanden Bosch was bitten after falling off her mountain bike.
And my ankle was bleeding, but I thought it just I didn't feel the bite. And then I thought I just broke my ankle. My face started tingling, and then my hearing went out. My body just didn't feel good.
Wildlife experts in Southern California say unusually warm weather has brought an early start to rattler season, meaning they're venturing from their typical winter and spring hiding places. Jim Crisula, CBS News.
This could take you back. American Girl is bringing back 8 of its original historical characters.
I think we'll be great friends. I've never had a real friend outside the family. Well, you do now, Nellie O'Malley.
Samantha, Addie, Josephina, Kirsten, Kaya, Kit, Molly, and Felicity have returned in their signature outfits to toast the collection's 40th anniversary. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu is out today, but not to worry. We've got Emily Grafeo in for the 10 o'clock hour, so that is very cool. And then Alexis Christophers comes in for the 11 o'clock hour.
I'm still
Have
here.
I got that right? Okay,
I'm still here.
Very good.
Yes.
So we got it all covered for you. It takes a lot of people to replace Scarlett Fu, that's for sure. Wendy Benjaminson is going to join us, Bloomberg senior writer on the Trump deadline, the Iran war. President Trump has set an 8 p.m. deadline for the reopening of the Strait of Hormuz, and lots of social media posts from the president this morning. Gene Goldman, CIO of Cetera, on oil prices, inflation expectations, and overall market volatility. Mandeep Singh, global tech research head at Bloomberg Intelligence, get the latest on what's going on in the world in technology. Sam Fazeli, he's the folk we talked to on global healthcare. He's based in London. We got him in New York here this week, so we're going to get him in studio, break down what's going on in the world of technology. Another M&A trade here. Gilead acquires cancer biotech Tubulis in a $5 billion deal. So just another healthcare biotech deal. So we'll break that down. So a lot coming up over the next couple hours. We have a sell-off in the markets. We've got oil higher on greater uncertainty. We'll break it all down, and we'll go to Alexis Christophers for a Bloomberg Business Flash.
All right, thanks, Paul. This Bloomberg Business Flash brought to you by EisnerAmper. Most advisors tell you what happened. EisnerAmper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. Stocks now at their stocks now at their lows of the morning as investors wait to see what happens with the Middle East today. with a deadline set by President Trump looming. We have got the S&P 500 down about 1% or 61 points. The Dow Jones Industrial Average sliding about 380 points, a loss of 0.8%. The Nasdaq down about 1.33% or 300 points as big tech takes a hit today. Brent crude up now about 0.7% at 110.61 the barrel. West Texas Intermediate up now more than 3.5%, closing in on $117 the barrel. The Bloomberg Dollar Spot Index 1213.87. We've got shares of Universal Music Group jumping 11% after Bill Ackman's Pershing Square said it made an offer to buy the record label, which is home to artists including Taylor Swift, Drake, and Sabrina Carpenter, for about $65 billion. If a deal happens, Universal Music Group would move its stock listing from Amsterdam to the New York Stock Exchange. And shares of Broadcom up 3%. The chip maker said it will develop and supply custom AI chips to Google and additional computing capacity to Anthropic. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Emily.
All right, Alexis, thank you so much. We appreciate that. Emily Grafeo sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studios. Alexis was just reporting we got a broad sell-off in the marketplace. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Alexa Semenova.
Gets confusing.
I got a lot of names here, folks. Nobody's the same. What's going on in the world of stock movers here today, Alexa?
So I'm taking a look at one of the companies selling off today. That is ASML. Looks like it's down 2.3% right now. This is after U.S. lawmakers unveiled legislation aimed to tighten restrictions on chip tool exports to China. The goal here is to subject Dutch and Japanese firms to the same curbs that American companies already face, and also broaden the scope of technologies covered. Analysts are estimating that this draft legislation could affect as much as 20% of ASML sales based on their 2025 numbers. And just looking at the Wall Street reactions here, everyone is talking about how detrimental this would be to the company. Citi says that we view this prospect negatively with significant unintended consequences. And then JP Morgan is saying that the new rule would take away about 29% of earnings per share, which is a pretty substantial number there, hence that market reaction.
It's interesting because I'm looking at what the analysts have said. Citi still has a buy rating. JP Morgan still has an overweight on the stock. You have to imagine, if the move holds,
perhaps
we'll
because this is draft legislation at this point. We'll see if it actually goes through, and then I would imagine that they adjust those ratings accordingly.
Okay, what's going on with Universal Music Group?
Yes, so billionaire investor Bill Ackman is proposing a bid for this company. This is the world's largest music company. It houses the likes of Taylor Swift, Drake, and Sabrina Carpenter, some big performers there. And the goal is to increase returns on one of the hedge fund's biggest holdings, Pershing Square Capital Management. That is Bill Ackman's firm. It currently controls more than 4.5% of UMG shares. So it is pushing to combine the record label with a U.S. listed acquisition vehicle, and the targeted value would reflect a premium of 78% to the company's closing price on Thursday. Looking at the stock reaction right now, U.S. listed shares up 10%. So investors seem to be happy about this.
He's going all in on this company in a big way. How about Broadcom?
So Broadcom climbing today after the chipmaker announced a long-term agreement with Google to develop tensor processing units. This offers an alternative to technology from NVIDIA. They have a supply assurance pact that runs to 2031. This is according to a filing on Monday. The company's CEO, Hock Tan, had previously discussed this on an earnings call, this collaboration. And he also said that Broadcom expects that its AI chip is going to top $100 billion in sales next year, and that would make it a bigger competitor, of course, to NVIDIA.
All right, Alex, thank you so much. Appreciate that. Alex Semenova with the Stock Movers here. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Today's a big day in the war in Iran because it seems like we have this time ultimatum from President Trump for Iran to open up the Strait of Hormuz and perhaps get moved to some level of a ceasefire and peace. So again, the world is on edge here today. Wendy Benjaminson, she's the senior editor for Bloomberg News based in Washington, D.C. Wendy, what's the latest reporting here? We've had a lot of social media posts from President Trump with some pretty strong language here. What's the latest?
Well, that is the latest, is that Trump has posted on social media, and I'm quoting now, "A whole civilization will die tonight." He is threatening to bomb, he had been threatening to bomb power plants and desalination plants that the Iranians use to get fresh water, and other civilian infrastructure like roads and bridges, but which has already has already begun from the Israeli side, although they're targeting roads the military uses primarily. But that's it. I mean, he is really, really, really dialing up the threats in the hopes that this will make Iran so frightened, apparently, that they will agree um, to points in the deal he's offering that they don't want, which would be free traffic through the Strait of Hormuz, or will never build a nuclear. They would never build a nuclear weapon, and therefore, which isn't going to happen. So pretty much the entire city of Washington is waiting with bated breath. I would say the whole world is, to see what Trump is going to do tonight.
Right, Wendy, and that deadline for tonight, 8 p.m. Eastern time. 8 p.m. What are the folks in D.C. doing between now and 8 p.m.? Are we going to get any significant, I guess, movement or update further from the White House, or is it all just wait and see? I mean, what do we do for the next 10 hours?
That's a good question. Well, Pete Hegseth, the defense secretary, was going to have a news conference this morning at 8 a.m. He canceled that. We don't know why. They didn't tell us whether it's because of the attacks on Harg Island, or it's because they're busy war planning. We don't know. But he canceled it, and that would have been with the Joint Chiefs of Staff Chairman Dan Kane. They've been doing these once every 10 days or so. We may hear from Marco Rubio this morning. Still not sure whether that's going to happen. Trump doesn't have any public events today. There may be a meeting around 4 o'clock that he opens up to reporters, but right now we are simply relying on those Truth Social posts to know what's going on. And I'd like to point out that that is highly unusual, if not unprecedented, at least in my lifetime.
Wendy,
that we're getting so little.
Yes.
Sorry.
Wendy, what do we know about any peace negotiations that may be ongoing? Who's involved? Are they taking place? Where are we on that?
Well, Pakistan, Egypt, and Turkey have been trying very hard to get the two sides to talk. They are passing messages back and forth. Trump claims that's because Iran has no communications network anymore. We don't know if that's true or not. Passing messages back and forth. And Iran, as far as I know, yesterday, I haven't seen anything since then. Yesterday, Iran said, we reject your peace proposal. So that's where we are. Whether they are continuing these talks, J.D. Vance is in Hungary to support Viktor Orban in his re-election campaign in Hungary. He is said today he's really hoping that that the Iranians come to terms. Maybe he's involved in that. Well, again, we don't know. The American people don't know what their government is doing right now.
What about the UN raising war crime concerns? I'm just wondering if you could talk a little bit more about just how much international pressure is building here and whether that even matters for, again, like the next 10 hours.
I'm not sure it matters. The UN Security Council is going to take a vote on a resolution that the UAE asked for, the United Arab Emirates, demanding that the Strait open, and also, I believe, suggesting that what Trump is planning tonight is a war crime, which is not really the UN's bailiwick, but they can say don't do it. It would be the International Criminal Court that would decide whether to pursue war crime charges. Trump is using an argument that because the sites he plans to attack are also used by the military, that's not a war crime. That really hasn't stood up before. A power plant is a power plant, and if it goes to your home and it goes to a military base, it's still going to someone's home. The trouble is, Trump said yesterday that he doesn't think it's a war crime and he doesn't care. And I don't think he cares. He's made it clear he doesn't seem to care what the UN thinks or the ICC. So
There we are.
Yeah.
Okay, Wendy,
we
thank
are.
you. We're all kind of figuring this out as we go. Wendy Benjaminson, she's a senior editor for Bloomberg News. She's based down in Washington, D.C., and the markets are certainly reflecting the jitters out there. WTI crude oil up $4.50. That's 4%, right just below $117 per barrel. That is the high of the day. Brent is up $1 to just under $111. So that's where you're seeing the angst. You're seeing it also in the equity markets with the S&P off about 0.9%, the NASDAQ off 1.3%, and the VIX up 2.5 points to 26.7, the highest it's been in several days. So angst in the marketplace. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Investors are counting down to President Trump's deadline at 8 p.m. Wall Street time for Iran to open the Strait of Hormuz or face strikes to destroy its key infrastructure. Let's begin with oil, where we have Brent crude up 0.6% at $110.42 a barrel. WTI crude now up more than 3.5% at $116.53 the barrel. As for equities, lots of red arrows. S&P 500 down 45 points. Dow Jones Industrial Average down 244 points. NASDAQ Composite down about 243 points. But United Health, Humana, and CVS are among the biggest gainers in the S&P 500 today. That's after the Trump administration said it would increase payments to Medicare insurers by an average of 2.5%, better than the near flat change it proposed back in January. PepsiCo is slashing prices by up to 15% on some salty snacks like Doritos and Cheetos. That's after sales in its Frito-Lay division plunged. And this summer's 3-day wireless festival in the UK has been canceled after its headliner Ye, the rapper formerly known as Kanye West, was barred from entering the UK for making anti-Semitic remarks. Wireless sponsors, including Pepsi, Rockstar Energy, and Diageo, all pulled out of the festival recently since Ye was announced as the headliner. Festival organizers say all tickets will be refunded. And that's your Bloomberg Business Flash. Paul and Emily.
All right, Alexis, thank you so much. We appreciate that. Emily Grafeo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and streaming live at Bloomberg.com here. Alexa was just reporting we have a broad sell-off in the equity markets. We've got yields lifting a little bit, and oil is higher here as the market continues to deal with the geopolitical uncertainty in Iran. Let's talk to professional about all of this stuff. Gene Goldman, he's the CIO of Cetera, joining us via Zoom from Santa Monica, California. Gene, what are the conversations that you're having with your clients these days? Because, boy, there are a lot of crosswinds out there, a lot of headwinds, and it's a big black swan out there called Iran.
I agree. First of all, thanks for having me back on your show. We're telling them two things. First of all, number one, market volatility, uncertainty is going to remain with us for some time. And you can point to so many reasons. Lack of clarity when the war could end. You know, the news this morning clearly shows that there's a lack of clarity. We also have the decentralized IRCG. We also have lots of overnight news. Second of all, the sharp rise in oil prices, the knock-on effects on inflation, the energy infrastructure damage. Third of all, I think this is pretty important. The Fed is really handicapped. You know, you have inflation concerns. They can't really cut rates on higher oil, shipping costs, tariffs. Look at the ISM prices paid that came out this week. And really, at the end of the day, with the payroll report coming in well above expectations, the Fed has to pivot from the labor market to inflation concerns. So with that said, though, what we've been telling our advisors as the therefore, the actionable investment advice, it's despite these overhangs, any pullback is a buying opportunity because we don't see. We think we were past the market low. We don't see a bear market. You need a bear market you need a recession to have a bear market. So again, why are we optimistic? Why is it a buying opportunity? First of all, the economy is pretty resilient. You know, you look at stimulus, low inventory sales ratios, payroll. We do expect oil prices to revert back to fundamentals, especially with slowing global growth. And you look at oil futures, they've not moved that much. So we do expect a lot of supply of oil coming in later this year. Second of all, valuations have really improved. The forward PE on the S&P has gone from 23 to 20. Look at tech, for example. Tech sector is below its 10-year average from a valuation standpoint. The Mag 7 PE has gone from 31 to 24. And third of all, there's so much cash on the sideline. We estimate about $26 trillion of cash on the money market and savings accounts on the sidelines looking for better valuations. So we continue to believe we don't see a bear market because you need a recession, but we do see market volatility, but any pullback is a buying opportunity.
And when it comes time for that buying opportunity, what are you actually recommending clients buy? Is it equities? Is it fixed income? And then if it's within equities, is it, you know, the mega cap tech stocks that have really led the market, or is it something different?
Yeah, so what do you do? So first of all, the big focal point, stay focused on the long term, stay disciplined, stay diversified. People forget the last few years, Mag 7 has done so well. Everyone was jumping in growth stocks. Diversification is a key strategy. And I think with a forward PE of around 20 times future earnings, it's an attractive entry point for investors with a multi-year horizon. So what do? We're saying overweight the U.S. We recently made some trades where we dropped down our non-U.S. exposure dramatically. You know, we can point to the dollar strength, which will be an impediment to non-U.S. investments. Also, the U.S. is an oil exporter. We're also incorporating some liquid alternatives like multi-alternative, equity long short, market neutral, as a way to have some investments that zig when the rest of the markets are zagging. And within fixed income, we're a little bit leery about duration, adding more duration given where the uncertainty we have with yields and inflation. But we've also suggesting, hey, reduce your high yield exposure. We have historically low credit spreads. So then when you dive into the equities, what are our favorite sectors? We love healthcare, attractive valuations, you get the aging demographics. We love industrials, given the war, given the energy infrastructure investment, supply chain reshoring. And technology has gotten very, very attractive. Valuations, AI remains in the early innings of this build-out phase. You have a lot of productivity gains that have not yet been seen in the markets. And then if you think about sort of the valuations, you look at the market cap of technology and communication services, that's about 45% of the S&P 500. Earnings growth ratio to the market cap weight is about 1-to-1. Go back to the tech bubble, earnings growth was about 19% less than where it was then. So we are finding some really attractive opportunities right now, especially technology, healthcare, and industrials.
Gene, thanks so much. Really appreciate that. Really appreciate your comments there. Very straightforward there. Gene Goldman, CIO, Cetera. He's buying this weakness, looking towards the other side. And we've heard that argument or that strategy from a lot of other folks here. What's still happening, despite all of the uncertainty in the world, is technology companies are doing deals. They are investing in AI. A lot of stuff going on, even today. So we asked Mandeep Singh to step in. Mandeep runs all the tech research for Bloomberg Intelligence, and we appreciate getting a few minutes of his time. Mandeep, let's start with Anthropic, Broadcom, Google. They're expanding a strategic collaboration that will allow Anthropic access to about 3.5 gigawatts worth of computing power starting in 2027. Talk about what's going on with Anthropic and Broadcom and Google.
Yeah, I mean, you remember the time when OpenAI signed all those deals for 10 gigawatt capacity?
Yep.
Well, things have changed. The momentum has shifted towards Anthropic in a big way. And now we see this deal, which really is a reflection of the momentum that Anthropic has generated from coding agents, from enterprise. In fact, Anthropic's revenue has tripled from 9 billion to 30 billion in a span of 4 months.
What?
This is breakneck growth that we have never seen, at least till the time that I've covered this space. And, now they are short of compute capacity. So they're signing all these multi-year deals to secure compute.
Okay, so this might be like a basic question for someone who follows AI so closely, but is this all because people want to use Claude, like Anthropic's Claude versus OpenAI's ChatGPT? I'm still using ChatGPT. I don't know if I'm very behind.
Well, so it all comes down to use case, and what Anthropic decided, which in hindsight, and hindsight is just a week's here, seems to be a very smart move, is really double down on coding agents as a use case. And this is really, tools that developers use to complete their code, write full-on code, that can save them hours. And now Anthropic has got 1,000 enterprise customers that are paying over $1 million plus each in a span of weeks. They've landed all these customers just for one tool, one product that they conceived in weeks. And they've been able to ramp that up so fast.
So who are the peers for Anthropic again? Just remind me, because I need my flow chart to remember who's who here. Who are the peers or who are the competitors for Anthropic?
I mean, on the coding side, you can think of names like Atlassian. They used to manage code, and coding agent is a new category. So when you think about, an agentic AI that's solving code end to end, this is the use case that everyone was waiting when they were asking the ROI question. This is the ROI that they were looking for. And think of the CapEx for 2027 now that we have seen this revenue ramp from Anthropic. I bet you 2027 CapEx numbers are going up.
When are these companies coming public? When can we see them? Because I don't even know who these people are.
In the back half of the year. And with
so
this,
it'll be Anthropic, you think, maybe?
Anthropic for sure.
For sure.
I will be very surprised if they don't use this opportunity.
ChatGPT, is that?
OpenAI. But OpenAI has got some trouble now. There was a point when OpenAI was the clear leader.
Right.
They had the best growth. Well, Anthropic has actually surpassed OpenAI in terms of revenue run rate. Just to put it in context, OpenAI raised money at $852 billion in valuation in their last private funding round. Anthropic was valued at $380 billion. So imagine a company growing faster, having surpassed OpenAI, was valued at half the valuation of OpenAI. So I would be very curious to see what is the next funding round for Anthropic look like. And I think they should narrow the valuation gap that they have with OpenAI.
And then what does it mean for Broadcom? Because we're seeing that stock higher, 3% today, but does Broadcom benefit from this long-term runway of
I mean, clearly anything touching Anthropic ecosystem right now should do well, whether it's Broadcom, whether it's Google on the chip side. Google as a standalone chip company will have a sizable revenue from this Anthropic deal. And that's where, NVIDIA or anything touching OpenAI will probably see some headwind, at least on the back of this news.
How often does how often does this technology evolve? How quickly does it evolve? If I buy a piece of software today, or I'm not even sure what I'm buying. I'm not buying a piece of software. I'm buying some AI product.
Yeah.
How long is that relevant for before some new technology comes along and makes it irrelevant? I got to go buy something else.
These companies are releasing new features every week. In fact, this coding agent product, as I said, was consumed in a matter of weeks. And so the next model release from OpenAI could be, better than Anthropic. But the problem that OpenAI may run into is enterprise, contracts are very sticky. Once you start using a product and it's a new product, new category, you're not going to rip and replace. And that's where what Anthropic is doing with coding agents, it's going to be sticky revenue because companies are assigning $1 million plus contracts now. They're not just going to go back and start using OpenAI if their next product is better. So this is sticky, and that's why I think Anthropic has created a new category, whereas OpenAI was focused on the consumer side. They did really well with ChatGPT subscriptions, but they missed out on this opportunity in terms of focusing on coding agents and enterprises.
All right. Mandeep Singh, I guess I feel a little bit better now that he comes in here, but usually I'm like, I got more questions when he walks out than when he walks in about this AI stuff.
Yeah,
but
we got to start using Claude.
I know. All right, I'm going to do it. Mandeep Singh, Global Tech Research Head, Bloomberg Intelligence, joins us live here in our Bloomberg Interactive Broker Studio. And again, just some of the numbers there. And I think, Mandeep was just mentioning, Anthropic said its revenue run rate has now topped $30 billion. That's up from $9 billion at the end of 2025. I mean, like weeks ago.
Right.
It's basically triple the run rate. You just never seen that. I've never seen that with the early days of Google, early days of Facebook, AOL. I was there, the third analyst covering AOL back in the day. Never seen numbers like this. S&P down 40 points, 0.6%. The Dow off 1%. WTI crude oil up about $4, just above $116 per barrel. Keep up to date on that. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are falling. Oil is on the rise again on concern the war in the Middle East is heating up ahead of President Trump's deadline for Iran to agree to a ceasefire deal. The S&P 500 is down 45 points at 65.66. Dow Jones Industrial Average now down 184 points. NASDAQ Composite down 256 points, a loss there of more than 1%. The Dow today being led lower by Apple, Nike, and Walmart. We've got Brent crude up 0.5% at 110.43 the barrel. West Texas Intermediate, meantime, up 3.5% at 116.32 a barrel. In stock news, shares of chipmaker ASML down about 5% after lawmakers proposed a law that would add further semiconductor export curbs on China, which could hurt the company's already declining China business. And Old Navy will reportedly launch a new format focused on athleisure called Old Navy Sport later this year. Women's Wear Daily is reporting that this assortment may include leggings, sweats, sport bras, T-shirts. Shares of Old Navy's parent company, Gap, down about 2% right now. We've got shares of Levi Strauss down about 0.8% ahead of its earnings report happening after the closing bell. And that's your Bloomberg Business Flash. I'm Alexis Christoforous, Paul and Emily.
Hi, Alexis. Thank you so much. We appreciate that. Emily Graffeo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, and now we're streaming on Bloomberg.com/video. That's where you'll find all the live Bloomberg video as well as all the curated stuff as well. It's another day, which means it's another M&A trade in the healthcare space. Gilead Sciences agrees to buy private German biotech Tubulis in a deal worth up to $5 billion to boost its portfolio in cancer drug development. Let's start there with Sam Fazeli. He covers all the healthcare stuff for Bloomberg Intelligence. He's based in London, lives in France, I think, but he's in New York. Go figure here today. So we got him in studio. Sam, what's Gilead doing here? What are they buying here? And what's the strategy?
First, can I just say I'm so happy to be here.
There
you
you
know
go.
I love coming.
I know you.
So,
and New York loves you. I mean, the restaurant, the wine sommeliers love when they see you walk through the door.
My flight door opened at 16:50 last night.
Yep.
I was in the cab at 17:15. That is 25 minutes door to door to the cab. Where are all these TSA issues? I'm not belittling them,
I know,
but
I
it
know.
didn't affect me, so I'm happy.
Well, because you were exiting
special.
the airport.
I'm special.
Oh,
Yes,
you were also
that's it.
special,
Yes.
right?
They see the guy
They rolled
coming,
out a red
open the
carpet
door.
for you.
Special passport.
So, what's Gilead doing? This is the second deal they've done in the past few months, couple of months, I would say. They are continuing to build an increasingly oncology-focused. They do have various assets, as you know, in HIV and oncology, and they've been building this out. This is a very interesting acquisition, I have to say. It's a private German company. I've met them 2 or 3 times, listened to their presentation. It's in a space, Paul, that had been kind of thought of, maybe China's taken over all of it, the ADCs, antibody drug conjugate world, and that there isn't really much to play for here. So they built this company, $401 million, the biggest European Series C ever announced about a few months ago. And now I'm going to come back to that and connect it all up. And in a space that you think China's overtaken the rest of the world and Europe. And here comes Gilead buying it for a hefty price, right? That $401 million, I don't know what the valuation was at that time, but this is a good deal for the investors.
And what kind of treatments are they now going to be able to offer with this acquisition?
Yeah, so Gilead already has a well-known Trodelvy ADC antibody. So what you do is that you put the drug, that's a chemotherapy often, that you want to avoid having the overall exposure in your body to an antibody that homes in on a tumor. That's the principle. Much harder than in reality to make work. So here what they're doing is buying a brand new, a pretty broad profile, a platform, and 2 drugs with it. So it's exactly in their wheelhouse.
All right, let's move on to the weight loss stuff because that's always in the news. Novo Nordisk will price its new high-dose Wegovy, which is what we use in the household, at $3.99 a month for cash pay patients, undercutting the cost of most doses of rival Eli Lilly's Zepbound. Is this just another example where this market we're now moving on to really competing on price?
Yeah, but they have been, Paul, for a while. And
Okay.
you know, a lot of the times we don't actually see the price that people are paying because it goes through a different channel, the rebates, the discounts, you know all that story of how everybody is so focused on the list price, and where actually people are getting is a much lower price, at least through the insurance. So it is not a surprise. It's going to keep happening. Novo needs to get its footing back in here. And it's interesting that it's happening just the week after that Lilly has been approved to launch their oral drug, right?
Wow.
And that's the first week or two. This Friday, we might see some of the prescriptions flow through. Everyone's focused on that. How strong a launch will that be? And
is
it's
the
just true.
expectation that even though you have to take this pill daily, people take pills all the time, it's no big deal, that this is going to really open up the market? Is that the expectation?
I mean, so the thing is that it doesn't give you as much weight loss as the jab.
Okay.
The jab is super powerful, right? But so you could think about it in many different ways. I'll just add it to my box. You know, a lot of people have these boxes with their vitamins and minerals and all that. I just add it in there, take it. It doesn't have any food restrictions or anything.
Okay.
So you get some side effects, but maybe you do it after you've done your major weight loss. So you've got your 3 pounds, 4 pounds, 10 pounds that you wanted to lose, and you're feeling great, and you don't want to be taking the jab anymore. Although a lot of people are fine with the injection. Yeah. It just helps. There are needle phobic people. It helps.
And what's the expectation for, is the pill necessarily going to be cheaper
Billions.
than the
No,
jab?
well, it should be.
For the patient, like what they're...
I don't think so. I think that would be a really odd thing for them to massively undercut. Massively. But I think you can play with pricing there, especially as it's got probably better margins than the injectable.
I mean, are these weight loss drugs as popular outside of the U.S. as they are in the U.S.?
Absolutely. In the UK, you know, we are a backward country sometimes when it comes to medicine, at least. We try, wait for 2 years before things get approved. There's a massive self-pay market.
All right, I have to ask, I'm asking for a friend here.
Okay.
Is there a baldness drug potentially out there?
Yeah, well, when you find one, can you let me know?
I mean, this is...
There is already marketed drugs for it. Folks who are...
But something that's as effective as these Wegovy things.
No, once you've lost it, I think you just have to gracefully accept your fate. If you're in the process of losing it, there are approved drugs. You can use it to fluff out the follicles.
But there's nothing in the pipeline that's just going to...
No.
Because, boy, that would be big.
Also, don't forget that as we go up the evolutionary tree, we don't really need hair. So perhaps it's evolution that's taking place here, right?
Have you heard
that? That's a good perspective. I've never heard that.
That's how I make myself feel better.
That's a good way to look at it. You mentioned China when you first came in. The FDA is trying to streamline clinical trials. What does that mean for how the U.S. competes with China in healthcare?
Desperately needed. Desperately needed. It takes months, if not a year or so, to start a first-in-human clinical trial. All for the right reasons, but a lot of it is red tape. So what China has been able to do is to really streamline that process. So it's so much cheaper to go over there. Imagine if you gain 9 months or a year in your development plans, and you can get an answer very much quicker there as patients are enrolled in your trials. So this is not about risking people. This is about just getting rid of some bureaucracy and allowing companies to catch up with the way that trials are done in China. You take away one more competitive advantage from China.
Are all parties here in the U.S. on board with this strategy? I mean, the pharmaceutical companies, the insurers, the
pharma
FDA?
Companies would love it. Yep. Insurance, I don't think they, at that stage of a development of a drug, they don't care. They wait for the very end of it. But certainly the FDA, this is the FDA talking about it now, right? So we do need this. We need this to take away one more competitive advantage from, or disadvantage in the U.S.
30 seconds left. How should we think about the West versus China in terms of pharmaceuticals and biotechs and all that stuff?
You need to constantly look over your shoulder. The research, the science, the capability is on par and rapidly rising. And there is a massive push by the government there because they can also have the luxury of being able to plan for 5, 10, 15 years.
Yep. All right, another thing to think about. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence, joining us live here in the Bloomberg Interactive Brokers studio, which leads me to believe that somebody's buying dinner tonight, because I have a lot of people from BI London are here in New York, and they don't come over here unless somebody's buying them lunch or dinner.
They know food.
Yes, they do. So I'm guessing there's some kind of paid meal today for a lot of these people. S&P and wine. S&P down 46 points, 0.7%. The Dow's off 200 points. That's about 0.4%. NASDAQ taking it on the chin here, down about 1.2%. That's 255 points. And you guessed it, oil higher. WTI crude oil up over $3 here, just below $116 a barrel. We did hit 117 earlier today. So angst in the marketplace. This is Bloomberg.